lesson we learn everything about every transaction as well as the golden rule income from self-employed completing entries, recording cash transactions. Altogether, we discuss and practice questions. Double entry bookkeeping. Double entry bookkeeping is a system of recording transactions. It is probably the most important thing to remember that every transaction is recorded twice. The two entries for the record the two aspects that the ledger and ledger account. The two entries record two aspects of ledger accounts. Transactions are recorded in ledger account. A ledger is a book that contains ledger account. Transactions are recorded in ledger account. An account is a history of all transactions in the ledger. An account separates what is received from what is given specifically in the cash account and bank account. Account has a left side known as debit side and right side known as credit side. Cash account. Cash account records cash received and cash flow. The left hand side of the account is called the debit side and is used to record cash received directly to the account. The right side of the account is called the credit side and is used to record the cash received out of the account. Business point of view. Bookkeeping or accounting treats business as personal limited business. Therefore, all transactions are recorded from the point of view of the business, not from those of its customers and suppliers. Date every entry and enter the name of another account in the business. Postings. Entries in ledger accounts are known as postings. Bookkeepers are set to use transactions to the account. Always remember to keep track of the debited trade postings and include the correct wordings and currency sign. Golden rule. The most important thing is to remember the golden rule. For every debited trade account, there must be an anchor credit. Double entry bookkeeping credit transactions. In this lesson, we learn everything about recording transactions, credit transaction versus credit account, how to record credit transaction, discounts, trade versus cash system versus accrual system, completing entries. Altogether, we discuss and practice questions based on this. Credit transactions. Credit transactions take place without any being paid or received at the time. No entries to record payment or receipt is made until money is paid off. Credit sale and accounts receivable. Remember to record all transactions from the point of view of the business, not from those of its customers. In a seller's book, a sale of credit is paid to sales account and debit to an account of customer. In accounting, someone who owes the money, business money, is known as a debtor. When the customer or a top place, their account is created as a bank account. Credit purchase and accounts payable. If the customer's purchase credit is debited to purchase account credited to an account of in accounting, someone to whom the business owes money is known as a creditor. When the supplier is paid, their account is debited as bank account. Trade discount. Trade discount is an allowance made from one trader to another. It is a reduction in the selling price of goods from one trader to another. This type of discount is only given when the buyer and seller are in the same place. Transactions are recorded only at the reduced price, so the net amount after discount. Trade discount is never recorded in the accounts. Cash or settlement discount. Cash or settlement discount is allowance for prompt payment. That is, if someone makes the payment before the stipulated time, the allowance is made to encourage such payments. Cash discount can be allowed as received. Cash discounts are always recorded in the purchase returns. Purchase returns always go to purchase returns account. They are never entered on the credit side of the purchase. Sales returns. Sales returns always go to a sales return account. They are never entered on the debit side of the sales. Accounting assumptions, principles, conventions, and concepts. In this lesson, we learn everything about GAAP, generally accepted accounting principles, the most important rules, duality, the magic, business entity, realization, materiality, matching principle, prudence, money measurement, historic cost, consistency, going concern, substance over form. Identify and altogether we discuss and practice questions based on these concepts from exams. Accounting principles. Accounting principles are sometimes referred to as concepts and conventions. A concept is a rule which sets down how the financial activities of business are done. Convention is an acceptable method by which the rule is applied to a business. Business entity. Business entity. The business entity principle is also known as the accounting entity principle. This means that the business is treated as being completely separate from the owners of the company. The personal assets of the owner, the personal spending of the owner, etc., do not appear in the accounting records of the business. The accounting records relate only to the business and record the assets of the business, the liabilities of the business, the money spent by the business, and so on. Everything is recorded from the viewpoint of business. If there is a transaction concept both the business and its owner, then it is recorded in the accounting records of the business. When the owner introduces capital into the business, it is credited to the capital account to show the funds returned to the owner. The capital account shows a credit balance representing the amount owed to the business to the owner. When the owner makes drawings from the business, a debit entry will be made in the drawings book to show the value owed to the owner, which reduces the amount owed to the business to the owner. Consistency. There are some areas of accounting where the choice of method is available. For example, there are several different ways to calculate the depreciation. Where a choice of method is available, the one with the most realistic outcome should be selected. Once a method has been selected, the method must be used consistently for all. This is known as consistency principle. If this is not done, the comparison of the financial results from year to year is impossible, and the profit of particular year can be distorted. There may be good reasons why it is necessary to change the method of valuation. In such a situation, change may be made, but the effects of this should be noted in the financial statement. Duality. The principle of duality is also referred to as the dual aspect principle. Every transaction has two aspects of gain and loss. The term double entry is used to describe how these two aspects of the transaction are recorded. Going concern. The accounting records of a business are always maintained on the basis of a going concern. This means that it is assumed that the business will continue to operate for a particular period of time and that there is an intention, there is no intention to close the business or this is the going concern principle. This continuity means that the non-current asset shown in this statement of financial position will appear at present value, which is the original cost less depreciation, and inventory will appear at the lower of cost. It is expected that the business will cease to operate in the future. The asset value in the statement of financial position will be certain. Assets will be shown at the expected sales value, which are more historical. The historical requires that all assets and liabilities are initially recorded in the accounts of the it is closely linked to the money management principle. Cost is an one-time calculation. Applying this principle is equal to comparing transactions occurring at different times because of their different application. Sometimes it is necessary to add up with more full principle to ensure that the concurrent assets are shown in more realistic. So the cost price is reduced. Matching. The matching principle is also referred to as the accuracy principle. It is an extension of the realization principle to the correct expenses. The revenue of the accounting period is matched against the cost of the same during the time of the accuracy of the business. The figure shown in the income statement must relate to the period of time over the rest. Whether or not money has changed hands, this means that if more combined can of the sales expenses and so on from year to year. Materiality. The materiality principle applies to items of very low value, items which are not commodities. Other principles can be taken recording size low value items are only strict application. For example, if I have a calculator purchased for office use strictly may not help us. Lot of this value will cost which are more non-used. The cost of calculating this and recording this each year would amount to more than the cost of the asset. Instead of the calculator being recorded with non-current asset, it will be regarded as non-current. What is material for one business will not be so for a business. The laptop computer may be regarded as material for a large organization, but it is material for a small business. A large business may decide that non-current assets can be less than the other to be regarded as material. Small business may have an excel over it. This principle is also applied to small business. Rather than having individual ledger accounts of businesses like the materiality is also applied in business. Money maintenance. The money maintenance principle means that the information is registered with the can be recorded in the it does not rely on personal operating conditions. There are many aspects of business that do not appear in the account. Moral of the program, that is of so small training course, all the important businesses will not appear in the account. Value cannot be expressed in monetary terms. Similarly, launch of the rival product of this company is not recorded in the The prudence principle is also known as the principle of continuity. This principle ensures that the accounting account against future application. However, the excessive prudence does not allow the accurate statement of assets or the deliberate overstatement of financial expenses. permanent finance. Accountants should ensure that profits and extra assets are not outstripping the liabilities. Phase never anticipate a profit or loss for the loss used to describe the principle of finance. Profit should only be recognized when it is acceptable. Such a profit is made realizable following the assumption of profit. Friends, is very important. If a situation arises where applying another of principle of growth, for example, under the realization method, profit is earned when first action is taken about the customer first to after realization, right? The principle of growth is applied at realization. Realization principle emphasizes the importance of non-recording profit and activity. This means that the revenue is regarded as more than ethical criteria because this is passes to the who has then obligation value to pay for goods. And an order is placed by customer goods and profit is earned. Profit is regarded as realized when it's actually generated. This is the same transaction substance or form. These words are used to describe the complicated process of doing not reflect the details. For example, a machine model manufactured within the problem of the seller and to the finance of the purchaser pays to pay the installment of the capital. The seller may reclaim the machine. This is the legal position of the machine. However, the machine is reclaimed from selling the same day as the other machines that have not been bought under the process. From an accounting point of view and for all practical purposes, the machine is no different from the other machine. This is the substance of the matter. The practical view is to refer to the legal view in the accounting view. This is known as substance. Balancing accounts. This lesson will learn everything about how to find and about a balance of goods in account, what debit balances means, what credit balance means, discount column impact, practice lesson. Just one. Why accounts need to be balanced? At some point during the training period, all the accounts will be discussed. The cash is balance period will determine how much money is left in the account for all cash. Similarly, the ledger accounts are balanced with how much money is owes other people, how much is owed, and how much money is spent on various activities. Right? How to balance them? Add each side of the account components of the lesson. Insert on that side inserts or in other words balance. Insert the total on this side of the account and carry the balance down to the other side of the account or transfer. Balance body and balance and body. The balance is carried on account should always be shown as brought down on the accounts of the next. The dates are important and one should always indicate a balance carried on CRD or brought down CRD. most cases, balance equality and balance equality is essential. However, do not just write only equality and equality. When more accounts balance, the guy will really balance because it is always important to know how much accounts of customers and supply the bank will turn to practice and securities. The statement of accounts are copies of the statements of customers in the customers and assign the customers so that we can say that the accounts of the suppliers. Any difference can be applied to an agreement reached between supplier and customer. The statements also include customer who paid the household balances. The other accounts are balanced as and when required. This could always be with balance. The classification of accounts and division of the ledger. In this lesson, we learn everything about the accounts are either personal or impersonal. The impersonal are either real or not. Ledger contains the transactions. All together, we discuss and practice questions. The classification of accounts. All accounts fall into one of two classes: personal account or impersonal account. Each of these classes can be further divided into subgroups. Personal accounts. Accounts for trade receivers. The customer who owns the business. Their accounts have debit balances. All the debit balances for all customers are added to the totally referred to accounts for trade credits. Persons to whom the business owes the money. Their accounts have trade balances. And all the credits are added to the totally referred to trade. The owner's capital and advance. Personal accounts. All accounts other than personal accounts. Asset accounts. Real accounts are things that the business owns. It is important to say that asset is not something owned by the business or owned to the business. Remove to state both aspects of owned and owned. Assets accounts are further divided into non-current assets and current assets. Non-current assets are things that are acquired for use in the business and not for business. These assets are intended to be used in business for a number of years. Future or non-current assets is capital expenditure. This includes such things as retail machinery. Current assets arise in the course of trading such as inventories, cash, and cash balances. Personal accounts, non-current accounts, expense accounts, which are things such as rent payable, wages, salaries, operating costs during train station. This type of expenditure is revenue expenditure. The costs incurred in running the business on a day-to-day basis. These accounts have a direct value. The revenue accounts are accounts with trade balance. These accounts record the revenue of the business such as fees and other income, such as rent receivable, discounts receivable, and interest receivable. Caution. Capital expenditure versus revenue. Distinction between types of accounts is very important. Clear data to ensure that capital expenditure is not controlled. The cost of purchasing the motor vehicle is capital expenditure and the cost of running the motor vehicle is capital expenditure. As a result, you will always find capital expenditure on this page. Revenue expenditure on the other hand is always found in the structure. Division of the ledger or categorization of the is a very small accounts. It is usual to divide the accounts among several ledgers. General or nominal accounts. Private ledgers are accounts of confidential cash contains cash and cash and bonds, petty cash and for minor items. Need for division of ledger. The division of ledger has discussed the work will be divided so that they do not all need to be working on the same ledger. It makes sense to group items of every seller's stock. Perhaps most importantly, it helps to detect and prevent errors in that process. And also help to detect the what happened stocks. The trial balance. This lesson we learn anything about what is the trial balance, the purpose of trial balance, how to prepare a trial balance, implications of trial balance, and limit of the insights of the trial balance. All together we discuss and practice questions. Trial balance. It is important to remember that a trial balance is not a part of the system. It is the ledger accounts are balanced when a trial balance is not good or trial balance should be good when a trial balance is not good. It's important to remember that trial balance is not a part of the system. It is the balance. Ledger accounts are balanced when a trial balance is not good or the trial balance should be good when the trial balance is not good. How to prepare a trial balance automated and is the amount that the total of the return not to be trial balance to check the addition to the trial balance for a balance. The difference between the financial investment and the if you have taken, if you have still I have found the concept that programs with a start to the format of the format of the definite columns. Well, can help us how compare them not balance well. Does not imply that it's not still valid. Error of resettlement and transaction cash is hard to get. Error of resettlement error of resettlement transaction error of resettlement transaction purchase account income statements also triggers. This lesson we learn everything about preparation of trial transfer, the concept of bank income accounting special account structure, role of the bank. All together we discuss and write discussion about these concepts. How to prepare and all the year about the transfer the balances on the transfer the revenues to and posting the opposite prepare the trading section of the trading section the balances of the sales how to prepare income statement trading section of the income statement all revenue on the similarly it is better to take also make an adjustment in the state of this make it with all there was a for selling in the trading section of the income statement and cost of prepare the rest of the income statement. Some key points to improve the income statement is proper display to the model always take the data the day and the year. It is part of the double entry model and transfer sales the sales the words cost of sales are connected to knowledge. The words gross profit are the gross profit is the profit and other expenses are taken into account. How to prepare an income statement? People who pay buy and sell. People who sell their expenses any other income should not be carried to the for the order is but it is often best to place the larger. It is also a good idea to bring to the best similar kinds of expenses the profit expenses profit calculation is better wrong format in past to learn. First you learn revenue. So that is the heading should come in income statement the definition in particulars. So you show the details that it is not a revenue. Less than give you net revenue. So from that you have to get first of the first part. Second part you learn knowledge of capital profit. And also this expenses. Less for starting. So show the cost of sales. So when you return cost of sales from net revenue, you get gross profit. So you have to income other income, you have to add other income. So gross profit plus discount received expenses. Other income minus income and profit. Gross profit, other income, discount received rental interest rates. So we will give you total expenses. So other income minus expenses. Income statement expenses of the section. So trading section the gross profit of the business profit and loss the trading section and the profit statement of financial statement of financial plus the statement of financial position is not part of the financial statement. Income statement and statement of financial statements are related to the every item in trial balance appears once in the set of financial statements. Trading section of the income statement. The trading section is done. This is the gross profit. For that, gross profit is equal to selling price of the minus cost of sales. Cost of sales. Cost of sales is the total cost of sales. This is minus the cost of sales. Some goods may have been stocked at the start of the year and some the formula for calculating cost of sales is cost of sales is equal to opening plus purchase. Net purchase. The purchases to represent the cost of sales. The carriage is not having to pay on those purchases. for own use. Trading account format is the format of trading using a daily display trading lessons. Profit and loss section. So profit and loss section is the profit and loss section. Another items are the profit and loss so to start the process, add and take out output and balancing the accounts. Okay. So Jana's business has opening balances at 1st October $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October 1st. Jana put her own money into the business bank account, 8,000. Bought goods for resale on credit from Dev. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid Dev money owed by check after deducting a 5% cash discount. Paid stationery by cash 30 bucks. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously opening balance cash account. So money is coming in bank account. Bank account who is giving it? Or cash book we can say. So this will come in cash book. Okay. So this is cash book. So even discount will come in this. But discount account also we have to prepare. Okay then. Jana put her own money into the business bank account capital. Bought goods for resale on credit from their purchases and their debit card, rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account contrast, so that will go to cash book itself. Paid Dev money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. So it is discount received account. So Dev and bank, that is already paid for stationery by cash. Stationery amount. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, 9, and 1 cash book. So cash book, this is ledger account as well as book of prime entry. So this is 1. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October 1, cash 1,000 cash, 2,500 in the bank. 1,000 cash, 2,500 in the bank. So it is balance brought down. Balance brought down. Then Jana put her own money into the business bank account 8,000. Own money. Okay, own money is nothing but capital. Own money is nothing but capital. So Jana has put her own money into the 8,000. So money is coming in bank. So money is coming in bank. So and what date? This is first. So it is on first itself. Okay. On first. So money is coming in bank, debit bank account, and who is the given? Who is giving it? So it is capital. So complete the entry. We have right here October 1, 8,000. So it is bank. By bank. We have received through bank. Next. Bought goods for resale on credit from 5,000. Purchases and 5,000. Purchase 5,000. So what date? Date is on 2nd, October 2nd. October 2nd. So purchases account debit. They account credit. They account credit. October 2nd. So again this year trade bill. Again this year trade purchases.
So the entry is complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1000, debit card, bank, rent and bank 1000. What date it is? Second. Second, rent 1000. Money has gone out from bank. Okay, so rent account, money has gone out from bank, so it will come here. So next, so we have to record in the opposite side in rent account. So rent account, so 1000. So October 2nd. So through bank we have paid. So rent account is an expense. Nominal account always debited. Next, sales are credit to Yash. Sales and Yash. Sales are credit to Yash. Sales. So what date? 4th. Sales are credit to Yash. Sales are credit to Yash. What is the amount? 3000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting him? Because we have sold goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit account that receives. Next. So next, cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th, cash sales 700. 4th, cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be credited on the opposite side. Sales account. So cash, how much? 700. So what did? 4th. Paid cash into bank account 500. Paid cash into bank account 500. What date? 5th. Okay, paid cash into bank. So cash into bank. Cash is coming in bank account. Paid cash into bank. So money is coming in bank. What date? 5th. 500. 5th. 500. Cash is coming. Paid cash into bank means money is coming in bank but going out from cash. So here it will come. So it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank this you have to write cash. Next. Paid Dev money owed by check after deducting 5% cash discount. So whatever money you have to pay to Dev. So we have bought 5,000, goods worth 5,000, and we have to pay after deducting a discount of 5%. On 6th we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250, and money is going out from bank 4,007. So today when we have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received 250. And this we have to transfer to discount received account. Here it is discount received 250. What date? Only amount on 6th. October 6th. Cash book. So we are trying to also. So next. Paid for stationery by cash 30. Paid for stationery by cash 30. So what? It is on 6th. Paid for stationery by cash. On 6th. On 6th. Stationery by cash. So money will go out to 30. Stationery. Stationery, money will go out. So what you have to do? You have to write in stationery here, October 6th. So through cash, we have paid stationery. Stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. So now we have to balance. How do we balance? So what is the most important account here is the cash book. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1,000 for 4,750. It is 5,750. 10,000 minus 5,750. So what you have to do? You write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5,750. Here you will get 10,000. So 10,000 minus 5,750, you have to subtract 1 from the other. So 10,000 minus 5,750 is 10,000 minus 5,750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here, so that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170 here. You write down 1,170, so that the total on both the sides become equal. 1,700. So this side is also same. This side is also. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried on is 8,000. So this will be carried on, to balance carried on. So will become by balance brought down. By balance brought down 8,000. So only the dates will change. So here it will be October 7th. Here it will be October 8th or October 17th. So balance brought down. So then, so purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they will account. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. 1,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes account. So balance carried on. So balance carried on is 3,000. So this will be brought down again. Balance brought down 3,000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Bring down the balances. This is how you have to do this balancing. Yes. So okay. So we'll catch up in the next class.
Dear friends, let's continue cash transactions. So just compare yourself if you have done this question. So Paris started business by paying 14,000 to Restaurant the business plan. open the necessary ledger accounts and post the following financial transactions where all financial transactions use the bank account. So we are supposed to open the necessary ledger amounts and post the following financial transactions. So first what we'll do, we'll just make a note of all the accounts. So we'll just make the debit and credit entries so that the concept becomes clear and it becomes easier for you to prepare ledger accounts. So Faris started business by paying 14,000 into his bank account. So what is happening? So money is coming into bank account. And who is the giver? Faris. So capital. So bank account. So this is debit. So Prishal in the business family. So what is happening? Money is coming to bank account. So money is coming into bank account. So debit what? Bank. And who is the giver? So Prisha is the giver. So Prisha is an outsider. So it is Prisha who is giving. So Prisha's account we have to give. So remember, we have to see who is the giver, whether who this person, whatever we mentioned is Prisha, is she a giver or is Prisha is the giver. So that's why her account will be credited. So Paris then had the following financial transactions: purchased equipment for businesses, 10,000. So purchase business office equipment, purchase equipment for businesses. So equipment account debit. Why? Because equipment is coming into the business. Equipment account. So then for businesses, so what is happening? Money is going out from bank. So all transactions use the bank account. So bank. So then purchase equipment for businesses. Paid rents. So what is happening? Money is going out from bank. Paid what goes out? Paid work is being paid. So then rent. Rent account. Rent is an expense. Rent account will be debit. Paid wages. Wages account debited. Why? Because it is an expense. Wages account debit. Why? Because money is going out. Bank account is money is going out from bank. Paid wages. Purchase goods to resell. So purchases account. Purchases account. So then bank account. Because money is going out from bank. So then sold some goods for 1,500. So what is happening when we sell? What happens? Money comes in. So bank account. Bank account. So 1,500. So what is happening? Sales. Sales is the revenue. Sales is the income. Sales account credit. Credit on incomes and gains. So refund money to customer for goods return. So goods return, refund money to customer. So it is sales return. Sales return is reverse of sales. Sales return. So we have to pay. Money will go. So return goods to supplier and receives refund. So supplier they are refunding. Return goods to supplier means purchase returns. Purchase returns is the opposite of purchases. Purchase returns. Purchase. So what is happening? They are getting refunds. So money is coming back. So Faris takes 400 out of the bank account for personal use. So what is happening? It's drawings. So money is going out from bank. So now what we have to do? prepare ledger account. You have to prepare. So let us prepare ledger accounts, bank ledger account, capital ledger account, Vishal ledger account, all the accounts. Let us prepare. So this is the format. So bank accounts always this side is debit, this side is credit. So always we have to write the date. What is the date? So June 1. June 1. So June 1. What has happened on June 1? Started business by paying 14,000 into bank. So what is happening? Money is coming in. Bank account is debited or credited? Bank account is debited. Bank account is debited. So what we have to do? We have to write here. Okay. So 14,000. Bank account is debited. So this is the meaning. Bank account is debited means here. Okay. So remember, sir, bank account. So what most of the students they get confused is something will be written here. They think this is debited. No. This bank account is debited. So bank account is debited and which account is credited? Which account is credited? Capital account is credited. So capital account is credited means capital account. So capital account is credited. So capital account is credited 14. So this is the meaning. So capital account is credited. See, bank account is debited, capital account is credited. So now here we have to write this. Why? How? Because of capital. So this is known as completion of double entry. So completion on the opposite side. So cash is debited with capital account. Bank account is debited with capital account. Capital account is credited with bank account. So the entry is coming. So this will come here. This will come. Bank account is debited with capital. Bank account is debited with capital. So this is known as completion of the entry. Completion, complete entry, complete. Okay, the entry is complete. So when we write here the entries. So next, what is the bank account debit to Krisha? Again 5,000. Bank account is debited means again bank account will be debited. So what we have to do? We have to write here 5,000. So why? From how we are receiving? From Krisha we are receiving. Krisha we are receiving. Bank account is debited to Krisha. So Krisha's account will be credited. Krisha's account will be credited means Krisha's account will be credited. So why? Because of bank. She has given money. Krisha has given money to the business. Krisha's account is credited. So this is how it is. So this is how we have to write. So finally, the books of account, ledger accounts will appear like this. So bank account, see capital account, Krisha's account. So whatever we receive, we have written here. Whatever we have paid, we have written. So capital account is always created. Capital account is created. So Krisha's ledger account, she has given loan, so her account is created. Equipment ledger account, it is an asset, it is debited. So we have paid it by bank, so it is complete. Here entry is complete. So rent ledger account, because rent is an expense, it is a debit balance. Wages ledger, it is a debit, so it is wages ledger account, wages ledger account is debited $600. $600. So similarly, purchase ledger account is debited with $2,000. Sales ledger account is credited with $1,500. So sales return ledger account is debited with 300. Purchase returns ledger account is debited with 500. So that is how it is. Okay. So this is according to the entry entries whatever we have written. So the entries whatever we have written. So based on this, first we have to write like this, then we have to finish the complete. So this is how it is. So the final answer. So after writing the ledger account, the entries will appear like this. So the ledgers will appear. So have a look. You can just check whether with your answer whether everything is right. So if everything is right, you have understood. So very simple. You don't have to do couple of answers for this. It is very simple concept, but remembering the logistics is very important, so that you don't commit mistakes in understanding the concepts. Okay. So we'll catch up in the next class. We'll do activity 1.2 in the next class. So dear friends, let's continue with Act 1.2. So this is David Hopkins' latest book. This is from David Hopkins' latest book. Okay, this is David Hopkins' latest book. So complete the entries for the following table with information taken from the accounts of the trader. So name of accounts to debit, name of accounts to credit. So what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers whether you understood or not. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So bank account. So bank. So we have to write here bank account. Bank account. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses and losses. Rent account. Rent account. Debit. So postage and stationery paid by check. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only you can. So postage. So here bank. Why? Because money is given away. Credit what goes out. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or whether it is given, whatever. So money will go out from the bank itself. So bank account. So here it will be telephone charges. Telephone charges. So heating and lighting bill paid from the bank account by standing order. So heating and lighting bill, heating and lighting. So heating and lighting expense. Lighting expense. Bank. Paid wages by check. So what is happening? Wages. Wages account by bank. Why? Because money is going out from bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited. Because money is being received, bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here rent is paid. So here the rent is received. So or you can write rent expense account or rental income account you can write. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can write. Interest received. So again interest can be received also and paid also. So that is why we have to specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening here. Drawings. So money is going out from bank, right? But out of bank account. So bank account. Loan received from a friend, D. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are through bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account. Bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we repay the loan, Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be credited. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases account debit to bank account. Purchases account bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the takings. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? No, it is purchase return, not supplier. Okay, so this is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales return. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales returns. Sales return, and we will credit bank because money will go out from bank. So carriage inward paid by check, whether it's carriage inward or carriage outward, money always will go out from bank account. So carriage inward, we have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an instance.
whether it is carriage inward or outward, it is always an expense. So money will always go from bank account. So here it will be refunded goods to supplier and bank the refund. So we have received the money bank account. Will be debited and purchase returns will be credited. Purchase returns are opposite of purchases. So purchases are debit, right? So purchase returns are always credit. Okay, purchase returns account. So this is how it is. So this is activity 1.2. So we'll continue in the next class.
Dear students, welcome. So today we'll discuss practice questions from cash transactions, David Hopkins' latest book. So before seeing this complete video, what you can do is you can just have a look at, you can try solving this question on your own. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive. So it will be debited. Sales returns you don't receive. Wages you don't receive. So this is the thing you receive. So this is the answer. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which books record the delivery cost? So money will go out. Obviously, money will go out. Bank account will be created. Money will not come in. So money will go out. So then, when you are selling, Amir got goods, bought goods. No. When you buy, you pay carriage inwards. So this is the one. So C is the answer. A trader takes funding from the business bank account for personal use. Which entries record this in his books? So money from business bank account for personal use, which entries record this in his books? So for personal use, drawings. So money will go out. Drawings. So it cannot be, when we receive you debit bank. When we receive you debit bank. So obviously when this cannot be the entry, so drawings will be the correct entry. So these are practice questions for David Hopkins' latest book. Okay. So what you can do is you can just have a look at the next problem. So below are the financial transactions for Mira's new business. Open is necessary ledger accounts and post the following financial transaction to them. All transactions use the bank account. Mira commenced business by paying 20,000 into her bank account. Mira then had the following financial transactions: purchased machinery, paid rent, bought goods. So paid carriage inwards, sold goods, paid for heating and lighting, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own, and suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description, in the comment section of the video. So I will just help you work out. So I will work out the problem and I will upload. So till then, have a good day. Bye bye.
Dear friends, welcome to Shasha's virtual classroom. So today we will discuss activity 2.1. So this is David Hopkins' latest book, the latest book. So we'll start. So below are the financial transactions for max business. First, the transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash transactions, how to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So it would have found one part, the other part would have been easy. But here, it looks somewhat. It is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So, basically, we need to know the personal account. The personal account. So, whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So, what you can question on your own. So, then you can compare with the answer here. So, first let us make a list of accounts that are necessary. So, we need to prepare Tina's account. So, we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Umar account. Because sales account is already there. Umar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically, we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency, date and the currency. Always. Okay, write always the heading. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing, if they have debited, then no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do we prepare Tina account? So this side is always debit, this side is always credit, always date, you have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again here. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts. Like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Payment. October 2nd. So it is always credit. This side is always debit. So how much? 300. See, sales is a revenue. Sales is always credited. Credit all incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So proceeds. So now one more thing. What is it? So now here we have to see what is Ali doing here? So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules and accounts. So Ali receives. So that is why we have to debit. So debit. Debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Okay, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. So nominal accounts expenses they write off as an expense. Income account they write off. A revenue account they also write. Assets account debit what comes in, credit what goes out, that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what Max is doing. What Max is doing, whether Max is giving, Max is receiving or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is very, very important. Okay, now it has been clear to you. So now everything is easy. So then the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200 with on what date? On 4th October. October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So purchase returns. Purchase. This side is always debit. This side is always credit. Always in dollars. It's in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. So we have to credit. So this is how you have to remember. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns with 200 with a debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important, so that the logical flow of concepts is very, very clear. Okay, so very, very clear. Logical flow of concepts is very, very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim, Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8. 8. From whom? From Lim, isn't it? Yes, Lim. So you have to Lim. So purchase account is debited with Lim. Purchase account is debited with a credit to limb, and limb account will be credited. It is limb account. We have to prepare limb account. Limb account. We have to do it. So October. $2,400. So why are we creating limb? Because we purchased from him. Understood? This is how it is. This is how you have to understand the concepts. Very clear, very clear. Now it should be crystal clear to you. Now let us move forward. So then, sold goods to Homer for 1100. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer receives. Homer receives. So Homer receives. So Homer account will be debited. Debit the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there, so we have to prepare Homer account and we have to write in sales account. So Homer account and sales account. Homer account. Homer account. So Homer account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Homer account is debited. Why? Because we have sold him. Sales. Sales. Homer account is debited with sales 1100. So now Homer account is debited, sales account is already there. So in sales account we have to write now. We have to write it in sales. Homer account, October 8. Homer account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost. We have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina . Purchase returns Tina. Tina, where is Tina? Purchase returns Tina 100. So why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11 sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of safe returns. So now sales returns. One more account, sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and it is on 11th, October 11th. And what is the amount? Total to only 300. So you have to write 300. Ali 300, sales returns 300. So there is no more. So he has returned everything. So sales returns account 300. We have to debit. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do? You can try working out activity 2.2. So below are the financial transactions for Penny's business. Post the transactions through the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods to Lee for 1,000. So return goods costing 500 less discount to Ting. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid B for goods bought on 15th November. Received full payment from B. So what you can do, you can try working out this question on your own, and in the next class you can cross check with the solution. So we will discuss this again in the next. Until then, have a good day.
Dear students, welcome back to Shashtra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Peng or Peng or whatever. So business, post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Ting account. So cost 5,000 less trade discount. So should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Ting account, sold goods to Lee for 1,000.
So sales account, Lee account. So then sales account, Lee account, 1000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he's a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is 45. So 45. 515 is 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 515 is 45. So 55. 55. Okay. So purchase goods from V. So again purchases. Purchase account is already there. So V. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. $3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So how many accounts should we open? 1, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250, 4,250. Because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars amount. You have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So So tinge account will be created. Why? Because he is the giver. When you purchase, tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with tinge. Tinge account will be credited with purchases. So next. Sold goods to Lee for 1000. Sold goods to Lee. Sales and Lee. Sales account. Lee account. Sales account and Lee account. So how much is sales sold goods to Lee for 1000 and November 5th. November 5th. 1000. November 5th. 1000. Credit to sales because sales is an income. So credit all incomes and gains. So 5th. So Lee, because Lee is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting the sold him sales? So we have sold him with credit. Sales account will be created because it's an income. Lee account will be debited because he is the receiver of the goods. Okay, then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is the debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to tinge. We have returned to tinge. So tinge. So what we have to do? We have to debit tinge. Now we have created purchase returns. Now we have to debit tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit tinge. 450.
always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, V would have given us the goods. So November 15th. November 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge, we have to pay V, and we have to receive from Lee. So received. 20th we have paid to tinge and V. 20th we have to pay to tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and tinge. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3840. So obviously we have to pay him 3840, and it is on November 20th. November 20th we have to pay him. So 3840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1000 from Lee. So we have received, what date we have received?
We have received on November 25th. November 25th. We have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1000. 1000 from Lee we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Peng's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything. So there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, account will be debited. Why? Because sale is an income, credit all incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods. Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods. Allen, that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So purchases, these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us the money. So he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go out from bank, and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins, the latest book. So okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practice questions from David Hopkins, lesson number 2. So which of the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with the solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's. And it is Joe's books means it is purchase. But in Maria's books, it's a sale. But in Joe's books, it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come.
It will never be recorded at gross 200, never at 200, never at 200, never at 200. So this is the only correct entry. So purchases account 170, Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So it will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with the new. Then have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 trade discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so %5 of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8, so 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000, less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded at 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. They record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. They record all purchase returns and cash book. Cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Prem account, discount received account, so these are the ledger accounts we need to prepare. 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. the supplier, invoice number, amount in dollars. Okay, so first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So at a direct discount of 20%. Again from Cora. So what date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? $12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier, so and amount. So what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned? Cora. Cora 320. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at that time you may need this knowledge. So At that time you may need this knowledge, because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book, what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. Okay. So it is in dollars. So this is also in dollars. So here, next, first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, returned, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320, worth 320. So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods worth 320. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to Prem, how much you have to pay? Prem, so the entire amount you have to pay. So Prem is 14,000. Discount is 280. Discount is 280. 14,000. Prem 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,720. So this is the amount you have paid to Prem. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment of November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, Prem 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts you need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800. So purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you have to reconcile. So it's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we enter it in purchases account. We record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10. Purchase returns journal. So what is it? $320. So now we have to prepare other accounts like Cora account. So we have purchased from Cora. So Cora's account will be credited. So always write the amount. Always write the amount
Cora account. So Cora account will be created. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. First and 5th. So on 1st it is 8,000. On 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. Purchase 8,000. Purchase 12,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is our core ledger account. So now next, what is it? So what date you have written? You have written on 4th November. November 4th. So how much? 320? Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be created. So individually you have to write. Or you can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. So November 10th. So cash book total. So we have to write here, that's all. So 1,304, not 13,004, 1,304. So that's also discount received. So what else is there? So I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and a book journal ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So
Welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at looking at this particular session, you can just try working out a problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format or particular, what do you say, in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between. So there should be one line. So again, similarly, this side also, there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash 1000. April 1st. April 1st. Okay. So one more thing. So whatever we receive, we have to write here. So all that is received, we have to write here. And whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account. So this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay at the time we receive discount. No, we receive. So it's a credit. So but when we receive, at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. Simple. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is receipt or paid. So here they are also discount received, they are written. Okay. So discount allowed. So here they have not written whether it is received. So this is just for you to remember. So just for you so that you understand, it is easy for you. Okay. So don't write this. So don't write. This is for you, just for you to remember. So don't write. Okay. So don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on 3rd, 800. On 3rd, sales 800. We are receiving. When we sell, we receive, no? So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay. So this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay. So this is the easy way. Bank cash. Banked cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out. Cash is going out and money is coming in bank. Banked cash. So money is coming in bank. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay. So a lot of students, they commit mistake. They get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple. That's all. Okay. So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on fifth. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also, so they get confused. Understand this is very important. Withdrew 900 from bank for cash float. Cash float means to keep in office, for cash expenses. So that is the meaning, okay, to keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money from bank. So this is payment, right? So money has gone out from bank. So against this, here you have to write cash. And this is called contra again. So again this is where you have, here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on one account and bank on the another account. Same. So very careful, okay? So lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked, okay? So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash bank. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800, 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1520. 2700 minus 1520 will be, okay, so this will be 1000, 1800, 2000, so it will be 1180. So here will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 1180. If you add all this should be 2700. So in other words, when you are balancing, so both the sides should be same. Okay. So here balance brought down. So balance brought down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry, dude. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay. So very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal.
So what are the various journals? Purchase journal, sales journal, purchase returns journal, sales returns journal. So those are all different journals. So whatever doesn't come there will come in journal, general journal. So what is the entry here? So motor vehicle account debit to Paul account. So we will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error, instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So how to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this, we have to credit, and to bring this we have to debit. So what is the entry? Furniture account debit, debit furniture account, credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next, third one. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones account in error. So what is the right entry? Received from B Jones. So we have received credit note. So we have to debit B Jones, a supplier. Okay. So we have to debit B Jones. So what is the right entry? We have to debit B Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B Jones. Okay. Received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit B Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit, means you have to debit B Jones. Understood? You are getting credit. So you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited C Jones as a wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principal. Second one is also error of principal. So this one is opening journal entry. And this is again error of principal. Instead of debiting one person, we have debited some other person. That's also. This is activity 3.4. This is the end. So looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply,
do a lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry, okay. So books of prime entry, practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not in the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased, okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. So it is under added. So this is the correct answer. That's all. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then very concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase, return goods, purchase. So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase. Purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely discuss this question once you let me know. Okay. So till then, have a good day. Good night. Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have a credit balance? So a capital account will have a credit balance. Obviously, it is capital.
Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have to add it 234. So that is balance. See, balance is 234. So it will be carried on. But it will be carried forward straight away. It can be straight away carried forward to trial balance. So we have to just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 130, 130. So balance carried on. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. This side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side, to make it 1340, so it is 740. So 700. So if we put 700 here, so that will be balance carried on. Balance carried on. So 700. So both the sides, the always total should match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be 1340. Next, A and B limited. A and B limited account, sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So we just so 700 plus 450 is 1150. So 1150. So it will be balance carried on. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received it, we have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing account. Motor vehicle. So balance carried on, same amount. So that both the sides it's the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 220, 45, 265. So 900 minus 265. 635. So balance carried on is 635. So the total, if you put balance, it will be. So to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance carried on will be this side. So 5,300 minus 3,500. So 1,800. So balance carried on will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances, why trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money. So trade payable are liabilities. Dear friends, welcome back to Shasha's Social Counseling. Today we will discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own and you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given accounts in the books of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, or the income, what is expense. So asset is something you have. So it is a resource controlled by an enterprise from which future benefits are expected to grow. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business, running the business operation. So it is income for you. So you can it is generated regularly or it is the main source of your operations. So expenses, the expenses which you incur like salary, rent, all those things and also. Okay. So rent is normally rent is let's assume it's an expense because since they are not specified. So if you see other line item here, rent receivable. Here rent receivable is there, so this is income. So let us assume and presume things. So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Okay. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposit. So you have got some money in bank, so you have earned interest on that, so that you can use it for your purpose. So it is interest received. Interest paid is an expense, so it is an expense. So we require right here. So trade receivable is an asset. Why? Because we have sold on credit and that person has to pay. So these are customers' accounts. So trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you have to your money will be waived off. So you will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending the postage to courier or all those things, So then next postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors. They include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed is discount received is also other income because interest received is main revenue from operations. Whatever is not from main revenue operations, it's considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So water revenue, main revenue. So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts, so we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you expect the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is a customer's ledger. There is supplier's ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers. Division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash book for the bank and cash accounts we use cash book. So sales ledger to record sales, purchase ledger to record purchases, general other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts, that is whatever is received, whatever is paid, all those are bank accounts. Okay, so capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is you are buying. So customer who buys goods on credit. So when you are selling, so the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether it is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, you are it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger itself. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Be careful. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book you can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So price. Okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and sales are related. So purchase ledger. So even though it is purchase ledger, is for the account of purchases, it is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here. Other income. So other income is like interest, all those things and all. Expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so that is nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal also. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts so that the concepts accuracy as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. suppliers. Okay. Purchase ledger. Purchase ledger, no? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of a dash account. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account, okay. So expense account is here, so expense account. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again where do you record? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contains the accounts of suppliers from whom the business buys on credit, correct? So the heating and lighting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit are recorded in the? No, it's not in sales, not a sales. Non-current, no, non-current. So only three types of ledger are there. So only three ledgers. Okay, so when they say ledger, okay. So then, goods bought on credit are recorded in the general ledger. So then, a dash is a set bought for use in the business for a long period, so non-current. So we have chosen this, nothing is related to sales. Just see, the dash ledger contains accounts of suppliers from whom the business buys on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash in non-current. So this is again purchase ledger, whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So you may get confused. See again, the concept should be very clear. Okay. So dear friends, welcome back to Shasha's virtual classroom. So classification and division of ledger. So let us have a look at the practice questions today. So which account is most likely to be kept in private ledger? So drawings, interest received, rent, sales, what is very private? So obviously drawings is very private. So how should the cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no. Asset, no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the accounts becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep arithmetical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things, So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy, a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay, so how do we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer as 31st December. As on alright 31st December. So we have to write it in a specific format. So basically we will have to write particulars or names of accounts. So here it will be ledger folio. So debit, credit. So we will have two columns, debit column, credit column. So let us start. So before starting, so property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles is an asset, always it shows debit balance. So office furniture. So remember one thing, what is that? So when you are learning trial balance, at that time you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balances by default, okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit, so it means it's a liability, so credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture, property 100,000, so motor vehicle 18,000, office furniture 14,000, office furniture 14,000, computer 2,000, sales 40,000, computer 2,000, sales 40,000, sales return 600, purchases 6,000, returns 500, purchases 6,000, return 500, motor vehicle expenses 4,000, advertising 1,600, advertising 1,600, office expenses 1,000, office expenses 1,000, stationery 400, stationery 400, cash 200, cash 200, bank 300 credit, capital 110,000, capital 110,000, drawings 3,000, drawings 3,000. So the total is, if you add both the sides, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So let us discuss activity 6.2 today. State which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales journal. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically there are 6 types of errors that may occur when debit and credit totals in the trial balance agree. They are as follows. So type of error, error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay, so omit. So omit. So omission. So Omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay, so not entered in the book of prime entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you incurred, you are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected, you have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignorant. Ignorant. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have to see payment for fuel for a vehicle has been debited to the motor vehicle. So vehicle fuel nominal account debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classified as expenses, where the motor vehicles are non-current assets. Okay, so it is wrong class, ignorant. So what has happened? The person doesn't know where to record. Instead of recording in fuel for vehicle, he has recorded as motor vehicle itself. So that is wrong. So ignorant means he is not followed the accounting principle, has not followed the accounting rules. Rules are not followed. This is same class. Okay, next time. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. A purchase invoice is entered on the purchase journal as 10. See, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal of entries. Complete reversal means instead of debiting, they have credited. Instead of crediting, they have debited, something like that. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should have been debited to Sam account. because it is paid. See here, the accounting principles. So whatever we have learned in first lesson. So cash transactions and credit transactions, you have to apply here. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept should be, it should be logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try shortcuts in learning. Never learn shortcuts. So a payment made to scam is debited to the bank account and exactly reverse, complete reversal. It is complete reversal. Okay, it is complete reversal. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then at all. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount, the sales journal is added to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be added by 200. See what has happened? 1000, 1000 instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance, they offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other out. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss here. Okay, customer's invoice has been omitted from the sales journal. Omitted. Error of simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry, because first as soon as we purchase, we record in purchase journal. So original entry, purchase of goods has been entered in the purchase journal. So it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? You have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct, no? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high overall on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overhead means expense has increased. So sales account, income also sales account. So income also has increased. Overhead, okay, both are overhead. So expense is debit, sales is credit. So what will happen in this case? This is overhead. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high. Overhead on the heating and lighting. Heating and lighting. So expense. So overhead to the heating and lighting. So expense has increased. Debit. And 52 low underadded. So expense. Again it is expense. It has been underadded. So it has underadded and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. That's all. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principal. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students, they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be 0. So never do that. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance at 31st December 2021. It does not balance. Rewrite the trial balance. Rewrite the correct trial balance and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets and expenses are debits. All incomes, all liabilities and revenue or incomes are credits. So they are credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before learn this, by heart this, whatever. So before starting this question, so try to answer yourself and then you can have a look. So plant and machinery is a debit balance, so this is correct. Loan from David. Loan from David is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rent and rates are expenses. They are not credit. It's wrong. So 3000 rent and rates, you are right here. So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft. So 200. General expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, it is again other income. So it should not come here, it should come here. So bank, debit balance, normally. Trade receivables, asset, always debit balance. Trade payables, yes, credit balance, it's a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns, sales is always a credit, sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital, drawings will always come here. So now you read out the trial balance, cross check, so it should be perfect and it should be matching. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day.
Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit. So it will have too much debit because you are debited. Discount received is a credit, so you are debited. So it is debited, and you are not credited to discount received. So you are not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason to increase the sales of a business. That's also, it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is a credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset, debit. So trade payables, liability, credit. Loan from Ting, liability, credit. Drawings is a debit. So balancing figure is, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay. So difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. This is from David Hopkins. Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then Sold goods to lie $600, it will be like that only. So return goods which had cost Garrod 200 less discount to core. So 200 less discount. So it was you had sold here, right? So core. So you had sold here. Now so it is being returned. So 20,000 less 200 less 10% is $180. 200 minus 10% is 180. So purchase goods on which limb which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be dollar 2800 minus 10%. 2800 minus 10% is minus 280. 2800 minus 10%, 2520. So it's 2520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2520. Sold goods to Chin for 1300. So no discount here. Lal returned goods which had cost him $200 less. So this is lie. We have sold for 600. Lie return goods which cost him $200 less discount. We didn't give lie any discount. So have we given any discount? Lie? No. So then this will be as it is. So $200 only. So there is no discount. It was not given. So it will not be given again. So it will never be given. So even though the question says like that, but we are not supposed to suppose, because here they are not mentioned whether we have given them any trade discount. Or it may be that there is a mistake. There is a mistake, printing mistake. So if that is the case, then less, because everywhere it's 10% trade discount. So let us consider it's 10% trade discount. It will be $540. $540. So which we should record. So here it will be lie return which it cost 200. So minus 10% will be $180. Okay, then Gerard paid core and limb the amounts due to them after deducting 5% cash discount. See, so many big calculations are there. Lai and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see how to calculate. Okay, so there is space here, so we'll write down. So Gerard, okay, so Gerard. These are the books of Gerard only, right? These are the books of Gerard. Gerard paid core. So we are paying to core. So remember, whose books? Gerard books. Gerard will never come. So core and limb. Okay, core. Core, how much we have to pay? Core we have sold 2700 minus we have returned. He has returned 27180. So 2700 minus 180 is equal to 2520 we have to pay minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? Minus 5%.
2394. 23. What is cash discount? Cash discount is 2520 5%. 5%. 126. 2520 minus 126 is equal to 23. Now core is over. So now lie. Sold goods to lie 600. Sold goods to lie. Core and limb. So limb again here limb. Core and limb you are paying. So limb you write here. Lie you write here. And what is the other one? Chin. Lie 600. How much has been returned? Lie 200. So 540 minus 180. 540 minus 180 is equal to minus 180 is 360 minus 5%. 5% is cash discount again. Cash discount. So that is equal to 360 minus 18. 18 is cash discount. Net amount payable will be 342. Okay, then core and lie and chin paid their own. Lie and chin. Okay, so now limb. Limb is limb. So limb. Where is limb? Core over, lie over, core over, limb. Limb is 2800. That is 2520. So are we returning anything? Rim. Is limb returning anything? Are we returning anything to limb? No, we are not returning. So 2520 minus 5%. So that is equal to 2520 into 5%. 126. 2520 minus 126, which is cash discount again. Cash discount. So that is equal to 2394. 394. Again same concept. Chin. So now chin. Where is chin? Chin is here. Sold goods to chin. So chin has not returned any goods. Okay, chin has not returned any goods.
only lie returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Return goods. Okay, so here you can see return goods which had cost Gerard rupees, Gerard $200. Lie return goods which had cost him 200. Lie. We are purchasing. Okay, so there is one sales return and one is purchase return. Okay. Chin. There is no return by Chin. Sold goods to Chin means there is no return by Chin. So 1300 minus 5%. So that is nothing but 1300 minus 1300 minus 5%. $65. $1, 1, 2, 3. See, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct accounts. So first, these are so many calculations. See, so many different calculations over there. Though this looks simple, some students make mistakes even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be credited by how much. So debit, credit. Okay, so purchase goods from car which cost 300 less trade discount 100. So we are purchasing from car. So Gerard is purchasing from car. So purchased. So purchases account will be debited. Account will be debited. Car account will be credited. Car account will be credited. Account will be credited because car is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why his account will be credited. So amount will be 2700. Amount will be 2700. Same line. Okay. See. So now sold goods to lie for $600 less 10% trade discount. Trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lie is receiving the goods. So lie account debit. Because he is receiving. Lie account will be receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to car. So return goods which had cost Gerard. So this is who is returning? Gerard is returning. So it is purchase return. So obviously when he returns, it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to car. So car is receiving the goods. No. When you are returning back the goods, car is receiving the goods. So he is receiving it. Car account. Car account should be debited. So then, purchase goods from Lim which had cost 2800 before trade discount of 10%. So purchase goods from limb. So purchase goods from limb means purchase. Again, purchases is always purchases. Purchases account. Purchases are always purchases. So purchase account. Goods from limb. So who is giving the goods? So limb is giving the goods. So limb account is created because limb is giving the goods. Okay. Sold goods to Chin for $1,300. Sold goods to Chin for $1,300. Sold goods to Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credited for this. So Lai returned goods which had cost him $200 less discount. Lai return means this is you have sold to Lai, no? Just see here you have sold to Lai and is returning the goods. Maybe they are defective. That's why Lai is returning. So Lai is giving. So you have to give, you have to credit whoever gives, right? So Lai account will be credited. And it is sales return. Sales return is reverse of sales. So it is debit. Sales return account. So then this is also done. Then now, so this is also over. So this is for this. Gerard paid Khar and Lim the amount due to them after deducting 5% cash discount. So when you are making, when Gerard is making the payment, who will receive? Khar will receive. So Khar will receive, Khar account, and Lim also will receive, Lim account, Khar account, debit, and credit what? Bank account. Bank account. But one more thing is there. What is that? Discount account is also there. Gerard paid Khar. So when Gerard is paying Khar, he is not paying certain amount, so which is cash discount. So it is discount received. So it's an income. So discount received will be, for Khar it will be 126. Okay. Khar it will be 126. And Lim it will be, again here also discount will come. Discount received will come. So here also it's 126. Both for Khar and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. 2520 here also. 2520 here also. Khar and Lim. Khar and Lim. Khar, how much you have to debit? Khar you have to debit 2700. What is the discount? No, correct one. 2520. Well, this is trade discount. Trade discount will never be recorded. Okay, trade discount will never be recorded. So it will be recorded at this. This will be recorded at this. Then Lai and Chin paid. So Lai and Chin paid means obviously money will come into bank. Bank account will be debited. Bank account will be debited. So live pays how much? Live pays 342. Live pays 342. We receive 342. So live account. Live. And when we pay, when we are receiving lesser the amount. So here there is no discount for limb. Live returned goods which had cost 200 less trade discount. Okay. Live 342 we are receiving. So bank and discount received. Discount received is, it's not discount received, it's discount allowed, it's an expense. So when you pay short, it is expense. Discount allowed is like 18. So here it is 360. Live will be 360. So bank account. So here in this case it is 1235. So discount allowed is 65. Discount allowed is 65. So chin will be created with this plus this. So that is 39. So now you have to prepare post the amounts. Prepare ledger accounts and post the amounts. So start doing this. So it's very simple. So we already done this. So we can do the rest of the part. So if required, we can do it in the next class. So dear friends, last class I had given this assignment to you. This is assignment from David Hopkins. So this is very challenging because in this your concept of books of accounts of particular person is very much important. So accounts of one particular person is very important. Post the following transaction in the books of both Brian and Ken. See what is if for Brian the transactions will be different. For Ken the transactions will be different. Because if he is buyer, he is a seller, and if he is a seller, he is a buyer. So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get get it wrong. So you are not so see if you write books of, but here the question is you have to post the transaction in the books of both Brian and Ken. But here they have asked you to write name of account to be debited, name of account to be credited. But whose books? Is this whatever you are writing here, are these related to Brian or are these related to Ken? So what is the best remedy? Let us for the time being we will consider this as the books of Brian. And for Ken, we will write separately here. Okay, books of Brian. So what is Brian doing? We have to see from the point of view.
So Brian sold goods. He is selling the goods. So it is sales for him. For Brian it's sales, and for Ken it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? Brian is giving. So this concept should be very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian means what is Brian doing? Brian is purchasing. Brian is purchasing. So it is purchases because these are the books of Brian, right? So you have to write it in the books of Brian. So it is purchases for him. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian if it is purchases, then for Ken it is sales. And the other side, it is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again, it is Ken who is receiving. So if it is sales for him, it will be purchases for this. So here it is Brian. Then Ken sold goods to Brian, means Brian has purchased. So then Ken. If it is purchases for him it will be sales. So if it is sales this side, then who is receiving? Brian. Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. Is receiving, and he is allowing discount because it is a loss. He is receiving less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid, no, simply, that's all. So cash. Cash is going. And he's paying less. So if he pays less, it is discount received. So it is an income. And to whom? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now Ben is paying. Brian has paid. Brian has paid. So cash. So he has paid less discount. So it is Ken discount. So here if it is discount received for him, here it will be cash and discount alone. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of Brian separately and Ken separately. So purchase account, how many ledger accounts will there? Purchase account, sales account, Ken account, discount received, cash account, all these accounts will come in this. And in this, so many accounts will come. So we'll prepare the ledger accounts. Shall we prepare the ledger accounts? I will give it as an assignment to you, so you can try on your own. So let me see, and I will discuss this in the next class. Dear friends, last class we had discussed this problem. So you can see still on the screen. So it is as it is. So we will now enter the following, enter these prepare ledger accounts for this. Post the following transaction in the books of both Brian and Ken. So we'll post the entries to ledger accounts of Brian and Ken. So how to do? So we'll proceed. So books of Brian. Okay, so books of Brian. So first we'll complete books of Brian. So Ken will be debited with sales. First entry, Ken will be debited with sales. Ken will be debited with sales. Ken will be debited with sales. So sales. Ken will be debited with sales. So what is the amount? Let us see. So the amount is 1500 and date is April. This 1500. Okay. So next. Next one, credit Ken with purchases. Credit Ken with purchases. Credit Ken with purchases. Ken with purchases. So what is the amount? So the amount is 500 less trade discount of 200. So 500 20% is 400. And that is on April 2nd. April 2nd, 400. So, and purchases will be debited with Ken. So now next. Brian Ken debit Ken with sales. So 800 less 25% trade discount. So 600. Debit Ken with sales. Debit Ken with sales. So it's 600. So what date? Third date. So Kenya debited. So what about sales? Sales also we have to accordingly we have to credit sales. Okay, next. Again, credit can with purchases. Again, credit can with purchases. Again, credit can with purchases. So what is the date and amount? 920%. Sixth. Okay. Sixth. 900. 720. So, so purchases you have to debit again. So can again. Okay, next. Now can pay trial for the goods bought on 1st April less in cash discount of 3%. So credit can with cash and discount alone. Credit can with cash and discount. Credit can with cash and discount. Cash and discount alone. So credit can with cash and discount alone. How much? For goods he bought on 1st April. He bought for 1500. So he got a discount of 3%. So 15 3 is 45. So discount allowed is 45 and rest is paid. 41, the rest is paid. Rest is 145. So what date is it? It is on 10th. 10th. So again it is So cash, it has to come. Cash column, it has to come. So this one. And who has paid? Ken has paid. Then how much? Okay, then discount allowed. Where is discount allowed? Discount allowed is the loss. So it becomes this side. Then so what is the amount? 45. 45. And what is the date? It is the next. Prayan paid Ken for the goods he had bought on 2nd April. So debit Ken with cash and discount receipt. Debit Ken with cash and discount. Debit Ken with cash and discount. Debit Ken with cash, discount, receive. So what is the date? What date? So 12. It's on 12. So now, what is the amount? The amount is for the goods you bought, let's say cash discount on 2nd April. 2nd April he bought for 400 minus 5%, 20. Discount received is 20. Balance is cash. 20. Balance is cash. This is how it is. So these are the books of Graham. This is how you have to record. Similarly, so now you can see how it looks. So you can just note it down, or you can just have a look. So discount received. Discount received ledger is also there. Discount received ledger is also there. Cash. Cash also is there. So here we have to complete the entry, right? So April to so Ken. Complete the double entry. Always complete the double entry. Discount received. So date is same. Amount is also same. Okay, so I would like to mention that all these things are very simple, but very basic and very important. Unless these concepts are clear, going ahead you will get confused in a lot of other concepts. Lot of students they ignore these topics. They take it for granted, like it is just easy. We have understood something like it, but afterwards they will get some concepts wrong. So teachers are not fools to teach you unnecessary things, redundant things. They are teaching with a purpose. The books are not written just to fill up the pages, but with a purpose. So please follow it strictly, do it sincerely, study sincerely. So now, books of Ken, I will leave it to you. If you want me to do even that part, please make a comment in the comment section of the video. I will do it. Otherwise, I am not going to do that. It is assumed that you have understood everything. So till then, bye bye. Have a good day. Dear friends, welcome to Shasha's virtual classroom. So today we will work out problems from books of crime and creed. So in this lesson, we will learn how we record books of crime entry, how to prepare books of crime entry. So this is a problem from David Hopkins. So Murugathai had the following transactions all on credit in March. So purchase goods from Piccolo for $10,000 plus trade discount of 20%. Piccolo allowed him 5% cash discount. Sold goods from Snyman for $1,200 plus trade discount of 10%. He allowed Snyman 4% cash discount. Purchase goods from Walters rupees 8,000 less trade discount of 10%. Walters allowed Murugathai 5% cash discount. Sold goods to Car for $10,000 less trade discount of 10%. He allowed Car 4% cash discount. Snyman return goods which had cost him $200. Return goods which had cost $400 to Piccolo. Purchase goods from Burger for 7,000 less trade discount of 25%. Burger allowed him cash discount of 4%. Sold goods to Kodzef for $3,000 less trade discount of 10%. He had allowed Kodzef 5% cash discount. Purchase goods from Piccolo for $6,000 less trade discount of 20%. Piccolo allowed him 5% cash discount. Car can return goods which had cost him 300. Return to Burger goods which had cost $1,000. Sold goods to Simon for $1,800 less trade discount of 10%. Both allowed Simon 5% cash discount. Receipt checks from Simon, Garg and Codes respectively in settlement of their accounts. So accounts receivable are free and send checks in settlement of their account to Piccolo, Walters and Burger. So then enter the transactions for March in United Books of Priority and post them in good form to the proper account. The transactions should be dated, however, for the purpose of activity. Ignore the dates and post the transactions to the correct books, the correct journal, and therefore the correct ledger accounts. So we should record this in the books of prime entry. So where should we record this? So what are the books of prime entry? Purchase goods, purchase register. Sold goods, sales register. Purchase goods, purchase register. Sold goods, we have to record in sales register. Snyman return goods. So Snyman, who is Snyman? Obviously customer. So sales return. Return goods which had cost to Piccolo. So return goods to Piccolo, purchase return. Purchase goods from this is purchases goods. Purchase register. Sold goods to Kodze, sales register. Purchase goods from Piccolo, purchase register. Car return goods which had cost him 300. Car return. Who is car? Car is so obviously it will be customer only. So sales return. Return to Burger. So purchase return. Sold goods to Simon, sales register. So receive checks from Simon, Car and Kodze. So we have to record in type for the payments and for the amount received and for the amount we have paid. So now we have to record it. So how do we record it? The first entry. So we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discount. So we never record trade discount. We have to record the transaction at set amount. So that is at 80,000. So 10,000 10,000 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 we record it in purchase register. So purchase register Piccolo 8,000. Purchase register Piccolo 8,000. Okay. So similarly, next. Sold goods to Simon for 1,200 less trade discount of 10%. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10%. So sales register Simon. So date particulars it is Simon. Simon. Sold goods to Simon for 1,200 less than trade discount of 10%. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080, card 2250, Codes at 2700, Snyman 1620. So you can see. So it is Snyman sold goods to car sold goods to Kodze, sold goods to Snyman again. So 4 sales entries are there. So we have to record it in this particular style we have to record. So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then the next one we have to record in purchases. So we have done purchase entry. So that's so purchases will look like this. So we have purchased from Ticolo, Walters, Burger, and again from Ticolo 4800. So we have to enter in purchase journal like this. So take some time to write it down. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman, we had sold to Simon. So Snyman return, which had cost him 200. No, 200. So Snyman 200. So like this, similarly, we have to record all the sales returns. Snyman return, car also returned, So Snyman and car we have to enter. So the entries will look like this: Snyman 200, car 200, 300. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are return goods which have cost 400 to Ticolo. 400 to Ticolo means obviously Ticolo has given 20% trade discount. So which had cost him 400 means that is the net discount before which had cost $400 to Ticolo. So that is before discount. So we have to take after discount and we have to record it after discount. So returns, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1000. So we have to record it net of discount. So we have to record in sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in cash book for the payments made and received. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods from Ticolo we have passed. All these entries have been made. All these entries have been passed. So now last entry, receipt from check. Receipt checks. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Snyman, we have sold to Snyman worth this one. These are the returns. Total again we had purchased. Again we have sold worth this one. So total amount is 2500. So totally 2500. he has given a discount of, we have allowed him discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving from him. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. These are purchases. These are the cash discount. This is cash discount. This is cash discount. So this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received and these are the amounts that are discount. So we have to write it. So where do you write? So all these three guys have paid. Three guys have paid. So how much they have paid and what is the discount? We have allowed them a discount. This is the discount we have allowed. This is the amount we have received. So all these amounts we have received. And we have paid to these three people. These three people we have paid. And we have got discount. These are the discount values. we calculate, so ultimately the payment, the amount we have paid, so this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have to record, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, we prepared sales journal or sales register, sales journal we prepared, we prepared purchase journal, we prepared sales return journal, we prepared purchase return journal, and we have prepared cash book also. We have prepared cash book also. So now what is left? So now we have to prepare ledger accounts. So what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. Total in sales account. So sales account we have to record the total. So first let us do the total. So this is the total of sales, total of purchases, total of purchases, sales returns, sales returns, purchase returns, sales. So how do we record? So come to ledger. So sales always is a credit balance by sales journal we have to record here. So how much is it? We have to record this here. So then sales return. Sales return. Sales return is reverse. of sales to sales return journal to sales return journal purchases account. Purchases is always debit. So to purchases journal so total amount purchases journal. This is the total amount we have to record here. So remember, we should never record individual entries in purchases account. So we have to record the total. Then purchase return. Purchase return is reverse. So journal, purchase return journal. So we have to record like this. Now we have to record entries related to Piccolo. So how do we record entries related to Piccolo? So who is Piccolo? Piccolo is a customer. Piccolo is a supplier, his accounts payable. So we have to credit him. So purchase. Purchase we have to record. Piccolo. So how much? Piccolo 8,000, 4,800. So purchase return is also there. What is purchase return? Purchase return is 320. Purchase return is 320. So purchase return is 320. So then we have paid. So we have got some discount. Discount received is 624. So amount we have paid. Amount we have paid is cash. How much we have paid? So you can see the cash bill. 11856. So we have to see here and then we can pay. So 11,846. Now let us just check. So now if we add all this, so that will be okay. So finally we have paid everything. So this is how the each and every account will look like. So you have to we have to do the posting. So then accordingly we have to prepare all the ledger accounts. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So Ticolo we have purchased. We have purchased from Ticolo and there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Ticolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount, and we have paid. So what are the amounts? Sales, sales return. So the discount allowed, cash. So Snyman's account is also done. So now Walter's account. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,000 to 250. So there are purchase returns as well. We have received, we have paid cash to burger. So what is the discount? Is there no discount? There is a discount, so we'll just see. Then let us first finish this. So remember burger account, there is we have to record purchases. So then cards, card. So we have sold goods to card. So we have to enter sales. We have to prepare card account. We have even made the sales return to him. So we are allowed in discount. So we have to record that. And we have paid, we have received cash. So even that we have to record. Then cards account, he is a customer, we have sold him. So 2,700 and we have allowed some discount and we have received the balance amount from him. So done. So what is left? Burger account. We didn't give discount. Let us check whether we didn't give discount. We received discount from burger or no. Burger, yes, 170. We paid him 4,080. Burger, we received discount of 170. We received discount of we received discount of 170. Still 170. So cash we have paid. So this is the amount of cash we have paid to burger. Then which account is left? We have to prepare discount allowed and discount received. We have to enter discount allowed and discount received. So discount allowed from whom and all we have received. So let us see. Discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivables only, right? So we allow discount to receivables only. So we allow discount to these three people. And discount allowed is always a loss expense. And what is the amount? Amount also we can just note down from here. What is the amount? These are the amounts. These are the discounts that we have allowed. So, and we have received discount from accounts payable. We have received discount. So we have to record here. So it is an income. So we will credit it. So who are the payables? Who are the accounts payables? These three are accounts payable: Ticolo, Walter, and Berger. Ticolo, Walter, and Berger are three are accounts payables. So we have received discount from them. So the amount is this. So the amount is this, and this. Okay. So this is how we have to see the chapter is very simple, but unless otherwise you do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advanced entries, whatever are required. At that time, you get stuck. So they look very simple. So at least one or two problems you have to do. So kindly ensure that you do this problem without fail. So then this is done. So what I do is I will give this problem as assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you work out. I think you can do it on your own. So I am 100% sure. So please try and finish it. So we can move on to the next lesson. So this is very simple. So one or two problems are more than sufficient. So if you want, you can do this. So if you let me know as a comment in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the accounts. How to balance the accounts, that is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so we'll continue with books of primentary. So this is another problem which is there in David Hopkins. So prepare journal entries with suitable narratives to record the following. So prepare journal entries only to ledger accounts, never to other books of prime entry. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of prime entry. Received from Mumtaz invoice number 506 dated 3rd March 10,000. This was in respect of the purchase on a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine account debit to Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine account debit to Mumtaz account. Account debit to Mumtaz account credit. So the amount will be, so what is the date? Date they are not mentioned. So they have mentioned just A. Okay, invoice number 506, purchase of machine on credit. What is the amount? Amount is 10,000. $10,000. 10,000. So you have tried the narrations. Gain, machinery, purchased on credit, void invoice number 506. That's all. So we have to record it. So it will not go to purchase account. So no subsidiary books of primary entry, book of primary entry. So we have to record it in journal proper. So next, invoice number 495 dated 6th March, sold to Wayne. Goods sold to Wayne. The invoice has been entered twice in the sales journal. So has been entered twice, has already been entered, but it is entered twice. We have to pass rectification entry. So what is the entry when we make the sale? When we make the sale, the entry will be Wayne to sales. So now you have to reverse the entry. Wayne to sales. Now it will be sales account to Wayne's account. So the amount is 675. 670. Sales recorded twice. Now reversed and rectified. So this is also done. Next entry. So then we'll see what is the next entry. Invoice number 998 dated 7th March for 4,250 in respect of delivery van purchased on credit from Yunus and paid by check. So delivery van purchased on credit from Yunus. Delivery van purchased on credit from Yunus. So 40 to 50, 4,250, 4,250. But you see, what is the entry? What is the question? Invoice number 998 dated 7th March 4,000 respect of delivery and purchase on rate from Yunus and paid for by check. So there is a check payment also, but we should never record check payment because check payment will be recorded in cash book. So only first part, which is purchase on credit from Yunus, only that will be recorded. So remember, if you write payment entry, then it is wrong. Very well. So never do it. Okay. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal proper or general journal. So this is general journal where we are recording because none of these entries are capable of being recorded in any of the prime, neither in the sales book nor in purchase book, neither in sales return nor in purchase return nor in cash book. So other than that, whatever is there, that should be recorded in journal proper. So next, credit note number 103 dated 10th March, one for $190 sent to Brownie but omitted from the sales return journal. So you have given credit note but you have not recorded in sales return journal. Now you record it, that's all. So sales return journal. So how do you record it? So what will be the entry? The entry will be, you have to write down in sales return journal, and then the next step is you have to write down the journal entry, that is you have to record the entry. So how do you record? Sales return to Brownie account credit. So you have to credit Brownie. Sales return account debit. Account debit to Brownie account credit. What is the amount? 190. Yes, 190. So you can write the entry full narration. So 190. So it's narrative. So you can write down full narrative. Sales returns now recorded. Sales returns now recorded. Sales returns now recorded. Next. Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The invoice has been posted to Geeta's account in error. So what has happened? It has been posted to Geeta's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Geeta. So it is purchased from Sandra. So So you should have credited Sandra. Instead of crediting Sandra, you have credited Geeta. So what you have to do? You have to credit Sandra and debit Geeta. So the entry will be Sandra account debit to Geeta account debit. So the entry will be Geeta account debit to Sandra's account credit. Geeta account debit. Account. Amount wrongly credited to Sandra. Credited to Geeta. No rectified. So now rectified. So this is how you have to pass the rectification entries. So here you can write. See, it should be in debit column. This should be in credit column. Machine account debit, Toyota's account credit, sales account debit, Ryan's account credit, delivery van account debit, Yuna's account credit, sales returns account debit, Brownie account credit, Geeta's account debit, Sandra's account credit. What is the amount? So the amount is 1300. Amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come neither of the books of prime entry, neither in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book. Neither of the books that will come in the residual book, that is journal proper. So carefully you have to do this. So this is how we have to record. So this very important aspect. So very entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. The debit and credit aspect you have to be very thorough. So we'll catch up in the next class. Till then, bye. Dear friends, these are exam practice questions from books of parliamentary. So this is again from David Hopkins. So let us discuss this. So exam practice questions. So this is basically number 1. Tanya purchased goods for 1000 less 25% trade discount. So trade discount is never recorded but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in her purchase journal? Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchased goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to 1800 minus 30%. 1260, 1260. So that is 1260. Okay, so she was allowed a cash discount of 5%. She was allowed a cash discount of 5% means she has to pay less. So how much she has to pay less? She has to pay 63 less 5%, no? 5% of this. So 63 less. So this one. This should be, how much should Lara have to pay for the goods? It is 1197. So when we subtract this and this, it is 1197. So this one is done. Next. See, these are exam style questions. So similar questions have been asked in the AS level examination. So these are not A level questions, but AS level. So, but IGCSE also they have been asked several times. So then coming to this, Cora sent an invoice to Maria for 2000 less 20% trade discount. So Cora sent an invoice to Maria for 2000 less 20% trade discount. So okay, so 20,000, 2000 less 20% trade discount is 2004, 1600. So 1600. So trade discount will be considered, but never recorded. So we have to take the net amount. So 1600, it should be at 1600. Cora has omitted to enter. She has omitted. Okay, Cora has omitted. So has sent an invoice means she has sold. To enter in her sales journal. She has not entered in the sales journal. So obviously what will happen? Sales account will be understated by 1600, not 2000, because the trade discount will be recorded. So even Maria's account also will be understated by 1600. The answer is, so then come this one. Xiong has received a check of $1540 from Raju in full settlement of a debt of 1700. How should this be recorded in Xiong's book of account? So what has happened? Xiong has received a check. So he has received a check of 1540 from Raju in full settlement of 1700. So there is a discount factor. There is a discount factor of 1700 minus 1540 is 160. So this should be recorded. Discount allowed should be recorded, and it should be recorded. How should this be recorded in Xiong? So nowhere this should be recorded. Bank account, this should be recorded, and this should be recorded. We have to consider as we have received full money from this guy, so the entry will be this one. This one will be the correct entry. So accordingly, the debit and credit aspect should be very, very clear. So practice these questions again and again. Often more and more questions you have to practice. So maybe a lot of MCQs we can discuss in the meantime, but before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever think of shortcuts. Never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to balance the accounts. Till then, bye bye. Dear friends, Welcome back to Shasha's virtual classroom. So this is balancing of accounts. Balancing accounts. So this is a question from David Hopkins. So basically, it's a very small question. So, but in this lesson, we'll learn how to balance an account. So balancing is nothing but totaling up all the values and then finding the difference and putting it on the right place. So that is what is balancing of accounts. So this is the last step before preparation of trial balance. After this, we will be preparing trial balance. So before that, you should know how to balance the ledger accounts, because trial balance is prepared on the basis of balances of ledger balance, balances of ledger. So in this question, this is a small question. So first, let us make a list of debits and credits, so that our writing the ledger entries will become easier. So let's classify and write which account will be debited, which account will be credited in each case. So paid into savings, paid is savings into business bank account 10%. So bank account, money is coming in bank account and capital. So bought goods for resale on credit from Joe. Bought goods, so purchases. Paid rent of a shop by check, rent, bank. Sold goods to Barney on credit, sales, Barney, sales. Made cash sales of goods, the money was used to set up cash flow. Made cash sales of goods, cash sales. Return faulty goods to Joe, returns. Returns to Joe. Joe paid by check for the goods he had bought after deducting a cash discount. So Joe has paid means paid Joe by check. So we have paid to Joe and we will receive a cash discount. So this is discount received. So then by check means obviously it's bank. Then paid for postage by cash. So postage. Cash. So now we have to prepare all these accounts: bank account, capital account, purchases account, Joe account. So ledger accounts, prepare necessary ledger accounts. 3-column cash book. 3-column cash book to record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger accounts. So then balance the accounts at 31st March and bring down the balances. So we have to balance also. So then what we'll do? So we'll start preparing all the accounts one by one. Okay, so capital account, purchases account, Joe account, rent account, Barney account, postage account, sales account, purchase returns account, and discount received account. So all these accounts we have to open. So now, what is the first entry? Paid his savings into business bank account, 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital, and capital account should be credited with bank account 10,000. March 1st. Capital account should be debited with bank 10,000. 10,000. So then credited, capital account will be credited. So capital account will be credited on March 1st. March 1st. So bank account $10,000. Then first entry is completed. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is on March 2nd. Purchases March 2nd. Purchases purchases account should be debited with Joe. Joe account. And Joe's account should be credited. So purchases. So what is the amount? Amount is 4,000. $4,000. Then what is the next entry? Paid rent of shop by check. Paid rent of shop by check on the same day. Paid rent of shop by check. So March 2nd. Rent account. So March 2nd. By check means bank account. What is the amount? The amount is 1,000. So 1,000. So the entry is complete. So now come to the next. Sold goods to Barney on credit. Sold goods to Barney on credit. So sold goods to Barney on credit. Okay, sold goods to Barney on credit. Yes. Barney. What date? So it's on 3rd March. On 3rd March. 3rd March. So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which accounts will be debited and why and all that ones, so that the concept is clear. So don't assume, presume without with half knowledge. Don't try to do the problem. So be sure, 100% sure before passing the entries. So don't commit any mistakes so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2,000. So everything will go wrong. So be careful. Done. So the entry is complete. Sales entry is also complete. Made cash sales of goods. The money was used to set up cash flow. So you are receiving cash on selling of goods, cash sales. So cash sales are happening. So sales are always sales, whether they are cash sales or credit sales, or if you want, you can write it separately, credit sales and cash sales separately. So since this is a simple problem, it's okay. You can write both merged together. So cash you are receiving. How much you are receiving cash? It is 550 bucks. So 550 you are receiving cash. So when is it? It is on 3rd March. 3rd March. So March 3rd. So cash. So or otherwise you can write sales also. It's not an issue. It is not wrong to write sales. And in cash column you write. So what is the meaning of cash note? To keep it handy. To keep it handy. Cash to keep it handy. They have sold some goods and they have kept money. So sales, the same date, cash account 550. Okay, now coming to the next part. Returned faulty goods to Joe. Returned faulty goods to Joe means from Joe we had purchased, now we are returning. So it is purchase returns 200. 5th. On 5th there is purchase returns. On 5th there is purchase returns to Joe. much? 200. Don't forget to mention the currency. So to whom we have written? Joe we have written. Where is Joe's account? Joe's account is here. So March 5th. What is the value? 200. 200. 200. 200. So the entry is complete. So now come to paid Joe by check the goods we had bought after deducting 5% cash discount. So cash discount. So we have to calculate how much you are paying. So 4,000. 4,000 is the purchase and 200 is the return. So 3,800. 3,800 we have to pay 5% cash discount. You have to deduct 800 minus 5%. 3,800 minus 5%. You have to deduct and pay. $190 is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. From. So 190 is the discount. So how much you are paying? 3610. 3610 you are paying. So when you are paying this, you are paying this on 7th. So you are paying this on 7th. 7th. So you are paying this on March 7th. What is the amount of rent you have paid? Rent you have paid 1,000. Okay. Rent you have paid 1,000 and you have paid it by check. So this is also done. Now cash discount over. Paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what date? 7th itself. Postage. Postage account. By cash 20. So postage account you have to enter in postage account also. So you have to enter in postage account also. Cash 27th March. March 7th. So dollars. Joe, you have paid, right? Where is the entry related to Joe's payment? You have paid to Joe. How much you have paid to Joe? We have received cash discount received also. Discount received and you have paid money to bank account. So bank account is 3610. $190 is the discount received. So discount received also should be entered. Discount received is again. So Joe account. So 190. So the entries are over. So all the entries have been made. So please cross check whether all the entries have been done. So you can cross check, I am sure, but you also cross check. Then now prepare the necessary ledger accounts and 3-column cash book. So we have prepared 3-column cash book. Balance the accounts at 7th March and bring down the balance. Now we have to balance and bring down the balances. Now this part is remaining. So we have to learn how to balance the account. So this we are going to learn. This is the main thing we will be learning in this lesson. So come to cash book. So cash book, what we have to do? Has everything been entered in cash book? Cross check once if everything has been entered. So then what you have to do? You total it up. So you total it up like this. So when you total it up, obviously okay. So you see, in the cash column there is a total of 550 on the debit side. Bank column there is a total of 10,000 on the debit side. Discount column there is nil. Here discount column there is 190. Cash column 20 is in credit side. Bank column there is 4610. So how we have to balance is, which side is heavier, this side is heavier, this side is heavier. So this minus this side minus this side, this minus this. So basically balance carry down your pressure. The balance carry down your right. Then what you have to do? You have to find the difference of this value and this value. You have to find the difference of this value and this value. So whatever comes, that you have to write. So is equal to 10,000 minus 4610. So 5390. See, when you put this value, this both will become equal. So the total should be such that whatever amount you put, the total will be same. See, they should be same. So to find that, we have to put that balancing figure. This is the balancing figure. That's why it's called balance carried down. So one is balance carried down. Similarly, here it is 550. Here it is 20. So what you have to do here also 550 minus 20, 530. So that even this both the total becomes 550. And what about discount column? No, never. Discount column should never be balanced because it is just it is not part of double entry. We are just posting it. So we should not. We have to write this directly to the ledger account. So it is discount received. We have to write as it is. We should never balance this. Remember, we should never balance discount column. Never balance discount column. If you balance discount column, it's wrong. So when you are doing cash book problems in AS level and IGCSE, you may be asked one or two cash book problems. So never balance the discount column. Should never balance the discount column. Then here, capital account should be balanced. So now coming to here, this is cash book is over, cash book is done. So this is known as both book of prime entry and book of secondary entry also. It is ledger also because cash, it is cash ledger and bank ledger. So it is cash ledger, bank ledger. So that's why we never record, we will never prepare ledger account for cash and bank. This is both. So it is both primary and secondary book. So now we have left out with the other accounts. What are the other accounts? Capital account. So capital account, this side is 10,000. So this will become balance carry down 10,000. So that both the sides are equal. So this is how did you get this? This is 10,000 minus 0 because nothing was there on the debit side. So the same value will come. So here the amount is same. So this will become balance carried down will become balance got down. When is this? This is March 7. So total 10,000. 10,000. So balance brought down will be again 10,000. Balance brought down. Okay. So normally nominal accounts like purchase account and sales account, they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just totaled and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So Joe's account. So if you see, both the sides are matched. So both the sides are same. So there is no question of balancing at all. So both they are already balanced. There is no balance got down or carried on. So there is no difference. So that's why you should not do anything. Then rent account is a nominal account, expense account. So it is not balanced. So just we have to total and take it to the trial balance directly. Barney account. Barney is a customer. So accounts receivable. So we have to balance it. So it should be balanced on March 7. It should be written as balance carried down. So that will be same amount 2000. So again, the total is same 2000. Total should be same on both the sides. Remember, both the sides total should be same. So these are the totals. So what happens is 8th March 8, they become opening balances. March 8, they become opening balances. They become balance brought down. We have to bring down the balance. So that is 2000. So postage account is not balanced. It is a nominal account directly transferred to this one trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balancing. Purchase returns you should not do. So you should just directly take it to the thing trial balance. The discount received Joe account directly taken to trial balance. So what should be balanced is only the personal and real accounts and assets and liabilities. That's all. Always assets and liabilities should be balanced. So whether they are non-current assets, current assets, non-current liabilities, current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. No, cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is why. So see here, balance carried down will become balance brought down in the next way. So it was balanced on 31st March. On 7th March, the balance rupees, $530 and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. Good done. Have a good day. Hello, dear friends. This is one simple lesson with the classification of counts and division of the ledger. So we have seen in part 1, we have read everything about it. So this is a simple practice exercise just to question up. So we can just discuss this. Complete the following table to indicate whether or not the following statement is true or false. The purchase of motor vehicle, motor car is revenue expenditure. It's false. It's not true. Because it is capital expenditure. It's false. So then the payment of wages to employees is revenue expenditure. True. The account of customer is kept in sales ledger. The accounts for customers are kept in sales ledger. No. It's false. The repairs of the office windows is an example of capital expenditure. False. It's revenue expenditure. It's not capital expenditure. The purchase of a stationery is revenue expenditure. True. The sales account is a nominal account. True. The figure and fittings account is a real account. Fixtures and fittings account is a real account. True. Suppliers accounts are kept in nominal ledger. False. They are not kept in nominal ledger. They are kept in specific suppliers accounts, payables ledger. The day-to-day cost of running the business are an example of revenue. Yes. True. Revenue expenditure. So complete the following sentences by inserting the correct word from the following list. The sales account records the dash of the business and example of dash account. Complete the following sentences by inserting the correct words in the following list. The sales account records the revenue is an example of nominal account. Revenue nominal account. The purchase of new machine is an example of capital expenditure. Non-current. Non-current expenditure. And account is an example of real account. Small items and expenses expenditure recorded in petty cash. A dash asset is required to keep the business for a long period of time. Non-current asset again. So here it's not non-current. It's capital expenditure. Capital expenditure. Okay. Very simple problem. So we put it up and we'll continue in the next class. Dear friends, welcome to Shasha's virtual classroom. So today we'll be discussing trial balance. How to prepare a trial balance and so here you can see there is a practice exercise. This is from David Hopkins. So you can see they are given all these things, all the details, sales, returns, purchases, and all they are given. And prepare a trial balance as at 31st December 2015 from the balance extracted from Hopkins books and calculate the balance on his capital account. So we are supposed to prepare the trial balance. So how do you prepare the trial balance? So the trial balance, the format of trial balance is something like this. So trial balance as on 31st December 2025, particulars, debit, credit. So it is a statement, okay? So it is a statement. That's why it is trial balance as on 31st December 2015. So we have to just plug in the figures. So they would have given the details. We have to just plug in the figures. What will come in debit and what will come in credit? Sales will always come in credit. Sales return is opposite of sales. Sales return will always come in debit. Purchases always debit. Purchase return always debit. So you have to understand this. Whatever you have learned till now, you have to apply, and then you have to prepare the trial balance. So coming to the question again here, see the question is here. So remember one thing, before preparing trial balance, just remember one thing, assets and expenses are all debit balances. Okay, assets, real account assets. Assets means plant and machinery, delivery van, bank. So all these are assets. So all these are expenses. So purchases, wages, heating and lighting, all these are expenses. Are all debit balance. They should be all be debits. So this will always be debit balances and they should appear on the debit side. Okay. So remember this, learn this graph. So this is very much helpful. Very basic foundation to for balances. Then liabilities and income. Liabilities and revenue are all credit balances. Liabilities and revenues are all credit balances. So what are liabilities? Liabilities are something we owe, right? So liabilities can be internal as well as external. So internal is capital. So external are like loans, accounts payable, all those are liabilities. So payables, all payables are liabilities. So these are all external liabilities, these are internal liabilities. Whether they are internal or external, they are always credit balances. Revenue or income are all credit balances. They always you have to write on the credit. So simple. So unnecessarily don't exaggerate, learn a lot of things, nonsense and all. Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. It is an income, it is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income revenue credit balance. Advertising expense debit balance. Postage and telephone expense debit balance. Discount allowed expense debit balance. Discount received income revenue credit balance. Plant and machinery asset debit balance. Delivery van asset debit balance. Bank balance asset debit balance. Trade receivables asset debit balance. Trade payables liability credit balance. Drawings opposite of capital, that is always debit balance. Drawings by default credit balance, but it is balancing figure. So you have to put accordingly. You just put it on the debit side or credit side, and then you can you total it up, you'll get the value. So we'll just do it. So we can prepare the trial balance. So seeing the question. So here you can see this is the question which is available. So you can make down, note down, or take up a screenshot or whatever. Or if you have the textbook, you can use it. Or take the screenshot and then we will just finish it out. So now sales is an income. Sales return is an expense. Purchases is an expense. Purchase return is a reverse of purchases. Wages is an expense. Heating and lighting is an expense. Rent payable is an expense. Rent receivable is an income. So it should come on credit side. We will rectify it. Advertising is an expense. Post and telephone is an expense. Discount allowed is an expense. Discount received. So see rent receivable. So rent receivable is an income. So discount received is an income. Plant and machinery is an expense. Is an asset. So always a debit balance. So then delivery van is an asset. Always a debit balance. Bank is an asset. Debit balance. Trade receivables is an asset. Debit balance. Trade payables is a liability. drawings always a debit balance. So then, so when we total it, we get these values 210,000 and 175,000. So capital will be the balancing figure. So what you can do is 2,10,000, 210,000 minus 174,000. So see, when you put this, this will both tally. So this is balancing figure, simple. So it's very simple. Just you need to know this concept. So just remember, all assets and expenses are all debit balances. All liabilities and revenues are all credit balances. Just remember this simple funda. It's very simple, very easy. So easy marks if it comes into question, and any question based on this either MCQs or anything, it's easy mark. So don't miss out. So lot of questions are based on this balances, concept of balances. We'll be often using this technique in solving lot of problems. So be prepared. So we'll just finish this and we'll just see the next problem. So next problem is, an inexperienced bookkeeper has extracted the trial balance as at 31st December from RT's books. It contains some errors and does not balance. Premises, this is correct. Our plant and equipment, this is correct. Office equipment asset, correct. Wages is correct. A rent payable is an expense, so it should not come here. So it should not come here. It should come here. So heat and lighting, correct. Other operating expenses, correct. Sales is correct. Purchases is correct. Discount allowed is expense. It should come here, not here. So discount received is an income. It should not come here. It should come here. Bank account is a debit balance, correct. Trade receivables is a debit balance, correct. Trade payables is a liability, it's correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the credit side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Rent receivable is an income. It should come this side. Capital is a liability. Drawings should not come here. Drawing should come here. So that's all. So we can do this as a assignment. So it's very simple, very easy. So this chapter is done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting in the next class. Till then, bye bye. So dear friends, so welcome to Shosha's virtual classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in US level examinations. So this is from statement of financial position. Okay. So statement of financial position. Now, multiple choice question. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current assets, right? Because it is office computer, so it is non-current asset. So you should go to non-current asset. Whereas they have debited to office expenses. So what has happened? The profit has come down. So the profit has come down. The profit is understated. The profit is understated. The profit is understated. And even net current assets is also understated because it has not been shown as a part of non-current assets. When you don't show, then the assets will be understated, right? So this is the answer. Simple. Okay. Then next one. So the owner of a business has taken goods for her own use, but no entry has been made in the books to record this. Oh, so it has not been made. So what happens? What row will show the effect of this on the statement of financial position? So what happens? Oh, inventory will be showing higher.
Inventory will be showing higher because inventory has not been recorded, drawings has not been recorded. So it will be showing, it will be overstated. What will be overstated? Inventory will be overstated. So then what happens? And even obviously the double effect, to complete the entry, you will not have debited to capital account. So the capital also will be overstated. So this is the right answer. Okay. So the following information has been extracted from a statement of financial position as of 31st December 2015. Non-current assets are 310,000, working capital is 30,000, long-term loan is 20,000, profit per year is 35,000, drawings is 25,000. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So that will be 3,40,000, 340,000. So long-term loan you have to subtract because it is non-current liability. Non-current liability you have to subtract. So that should be 320,000. So 320,000 is net assets. So we have done the problem already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000, 3,20,000. So what was the balance on the capital account of 31st December 2015? So this has no relevance. This has no relevance. So if the concept is, you will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you have not understood the concept, then you will get this wrong and you will mess up. So don't be in a hurry when solving MCQs. Be careful. Carefully you solve the MCQs. Explore all the options. Be conceptually perfect. Be conceptually strong to secure A plus in A levels. Okay. So don't be in a hurry. Never be in a hurry. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital because assets is equal to liabilities. So capital is also internal, internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. Just now we did assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to asset. This is wrong. So this is the correct answer. So liabilities is equal to assets minus capital. Correct. Assets minus capital will always be equal to liabilities. So you can do this using the formula. So by substituting here and there this one. So you know that, right? So assets is equal to liabilities. So you might have already learned this in basic accounting, like accounting equation. So you might have done a lot of problems also based on this. So if this is the first lesson that is taught in accounting, so you must be knowing this. So when you just crisscross this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, if you know this basic simple math, then you can do this. So simply, so this is the answer. So this is over. So we have covered statement of financial position. One simple problem also we have done. We have done MCQs also. So you have understood the concept very clearly. So please share. Please spread the knowledge. Please share so that others also get the benefit of my classes. Okay. So please share. Thank you. Have a good day. Good night. Dear friends, welcome to Shasha's workshop classroom. So today we will be discussing statement of financial position. So we will be, this is a very important class. So please have patience and focus on this. It's very important. Okay. So Statement of financial position. Financial position. In 5 steps. So first step is non-current assets by default. Okay, so non-current assets. First, you should understand what are non-current assets. So you have to make a list of non-current assets. The trial balance should have been given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial statement. So very important. Okay. So non-current assets are those assets which are meant to be used in the business for more than 12 months from the date of financial statements. So what are financial statements? Income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down first. For example, land and building. Land and building may be forever. So land you will never intend to sell. Normally you will never intend to sell, and building maybe you may again you may change it after maybe 15 years, 20 years, or maybe after 25 years or 30 years or something like that. But land will never be. It's not in the bit. So it is more permanent. It is most permanent. Then what is the next one? Next one is machinery. Okay, so plant and machinery. So plant and machinery, maybe you can use it for at least 10 to 15 years unless there is any technical changes. So the next one. So then comes vehicles, motor vehicles or vehicles. So because you will be using them for a longer period. Then comes furniture. So non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, if they say the very next day, they may change. So they are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are credit customers. Credit customers from whom we have to receive money. So to whom we have sold and paid, and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. What are cash and cash equivalents? Cash and cash equivalents means it can be cash in hand, cash at bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short-term cash deposits. So all those are cash and cash equivalents, particularly cash and bank balances. So this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items are based on the question. So whatever details have been given in the question, based on the items that have been given in the question, so the current assets, list of current assets should be prepared. Then third one is current liabilities. So remember, this is with regard to financial statement of sole traders. Okay, these are with regard to a financial statement of sole traders. Because when you are preparing financial statements of company, the format is entirely different. The items are same, but the headings are same, but they have to be shown that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. How to go ahead with this preparation of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be received in paying, so that's this will not be same. So because of this, all these are what they say, they are dynamic in nature. They are dynamic in nature, means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current assets. What are current liabilities? Current liabilities are, see, trade payables. Okay, so what are trade payables? So credit suppliers. So you have purchased goods on credit, you have to pay them after some time. So maybe after 30 days, after 35 days, 40 days, 45, whatever. So you have to pay immediately. It is payable within the period of 12 months. So this also within 12 months. Okay, so trade payables. So again, what is the bank overdraft may be there? What is bank overdraft? You might have made arrangement with the banker to take money for a shorter period. So that is what is bank overdraft. So then what you have to do when you are preparing the financial statement? So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then current assets, the figure total. So then this one again, current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. You have to calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus 3. Though you are not required to write what is working capital, you don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1, 2, 3, 2 minus 3. So whatever amount comes, you have to write here. Then fourth one. So non-current liabilities. So what are non-current liabilities? Liabilities that are payable more after a period of 12 months from the date of balance sheet. Okay. So more than or after 12 months from the date of balance sheet. For example, bank loan. So bank loan normally when you will pay after a period of maybe you pay after 2 years, 3 years, or maybe even pay 10 or 15 years also. So that's why it has payable after a period of 12 months. So what is the example, best example for this? Maybe you have taken a bank loan. So maybe you have taken long-term loan for many years. So which has to be repaid after a period of 12 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this. You have to add all this. So you have to add bank loan, long-term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets. Net assets. What are net assets? All working capital minus our net assets are nothing but non-current assets plus working capital minus non-current liabilities. What is working capital? Working capital is nothing but current assets minus current liabilities. So very important, don't confuse yourself. Very important. So first you have to find out non-current assets. To that you have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. The fifth item. What is the fifth item? Fifth item is owner's equity. Fifth item is owner's equity. Okay. So what is owner's equity? Capital at the beginning. Add net profit so less drawings. So the net amount will be the capital, owner's equity. Okay. So that net amount will be owner's equity, that is the capital. So ultimately this should be equal to net assets. So finally net assets is equal to owner's equity. You have to follow these steps particularly in this particular order, specific order. Just follow this. You can do any damn problem in statement of financial position as far as sole traders are concerned. So we will just work out another problem, one simple problem to demonstrate this, how to find out how to prepare statement of financial position. Till then, have a good day, goodbye, good night. Dear students, dear friends, welcome to Shasha's lecture classroom. Today we will focus on important points in income statement. So they are very important in the sense that most of the students, they commit mistakes. Often they think whether we have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are often prepared in vertical form. Since it makes them easier to read, you should study and learn the vertical form carefully until you are quite familiar with it. So there are various forms. There is a horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar with it, so that you can work out the problems with ease. Do not prepare journal entries for the income statements unless you are specifically asked to do. They might have been shown in the chapter simply to help you understand how entries are made. Okay, so there are so many entries. If you look into the chapter, income statement chapter, you will find a couple of entries. They are not important. In the essence, they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to do it. The heading is important. Okay, so the heading, when we start any problem, the first thing, the heading is very important. The fact that it is the income statement for the year or months ended. So you have to write it as income statement for the year ended. The statement covers a period of time, so it is necessary to state the period. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected two places. Carriage inwards. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is, what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added with cost of sales. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sales. You should not treat it as an expense, like expense in the sense which we have to show below the line. So it should be considered as part of cost of sales. Carriage outward. The cost of delivering goods to a customer is carriage outwards and is debited in the instance statement as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated at the cost of sales. So goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications will be there or some final touches will be remaining. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work. Which work? The additional work on the goods. Okay, so this work should be debited as part of cost of sales. So those particular part,
that particular part of expenses, the cost which are incurred to improve the product. They should be treated as part of cost of sales. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So, sales minus sales returns will give you net sales or net revenue. So, to that you have to, from that you have to subtract all cost of goods sold. So, what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So, to that we add carriage inwards, and from that again we subtract the closing inventory. So what we get is cost of goods sold. So what you have to do, from that once from net revenue we have to take out cost of goods sold, then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken into account. When there is no trading account, when there is no trading, there is no gross profit. Remember that. It's very important. Okay. Some cases you may be asked to prepare a statement, income statement, where they would not give any opening inventory, closing inventory, even purchases may not be there, sales may not be there. For example, in case of service industry, service people who are rendering services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't arise. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full word. Okay. So you cannot use the shortcuts. Any other income. You should add any other income to gross profit. So suppose you have got other than sales. If you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross profit. Overhead expenses. So we have to, after you add up other expenses, there are overhead expenses which you have to show. So there is no particular order in which overhead should be shown in the income statement of sole trader. But it is often best to place the larger amounts before the smaller. So there is no particular order. It is not mandatory that you have to show it in particular order or something like that. But it is often best, it is a best practice to place the larger amount before the smaller. So that you show the bigger amounts first, then you show the smaller amounts. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, heating and lighting and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to. And this is not compulsory. So this is it is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial position. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You need to use it again when you prepare the next document. So the next, the chapter after this is statement of financial position. There you will be using the net profit, whatever you calculate. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense, again when you study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, we incorporating this, you have to prepare income statement. So again there is one more chapter, provision for depreciation of non-current asset. Again, There also you have to incorporate the depreciation and you have to prepare income statement. Irrecoverable and doubtful debts. Again, there is another lesson, another chapter called irrecoverable and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete records, you may be required to prepare income statement. Not-for-profit organizations. See, not-for-profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So there they may be doing some sort of business. They may buy some inventory, they may sell something. So all those things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base, and you have to learn all this as a comprehensive. So that is how, that is where a lot of students commit mistake. So you have to be very careful. You have to be very attentive. You learn each and every aspect. Learn every lesson carefully. Learn every chapter carefully. Work out all the problems before attempting the main examination questions. You have to be double sure. You have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. And introduction to the accounts of limited companies. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing account, there are so many other aspects. There are a lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall important, and lot of questions are asked from income statement. So you have to be, it's very important topic. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statements. So they don't need trading accounts. So that is there is no question of preparing finding out gross profit because there is no trading. So if the business is a service business, one which does not buy and sell goods, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income, which will be the fees received less the expenses to leave profit for the year. That's it. So it's very simple thing. Okay. So keep these points in mind. This is very important. So then in the next lesson, we will start with working out the problems. Okay. So dear friends, coming to income statement for sole traders, the following trial balance have been extracted from Hadley books as at 31st December 2015. So this is extract from David Hopkins. The following trial balance has been attracted from Hadley's books as of 31st December 2015. Plant and machinery 25,000, office furniture 6,000, inventory 1st Jan 11,000, trade receivables 4,740, trade payables 1,976, bank 3,327, loan receivable 5,000, sales 72,800, purchases 28,540, sales return 1,600, purchase returns to 144, wages 3,100, rent 4,000, heating and lighting 5,120, advertising 2,400, other operating expenses 2,010, loan interest to the 250, drawings 4,843. Capital 20,000. Inventory at 31st December 2015 cost 9,000. Prepare Hadley's income statement for the year ended 31st December 2015. Income statement for the year ended 31st December 2015. So we have to prepare income statement. So based on this information, so it is Hadley's income statement. So for the yes in the 31st December 2015. So particulars so heading is very important. So we have to write particulars and dollars, and date is also very important. So name of the trader also should come. Add this income statement for the year 31st December 2015. So what are the 5 steps? First we have to record sales and sales return. So sales minus sales return. So first step, sales minus sales return. So what are the sales and what are the sales returns? Sales are 72,800, 1600. 72,800, 1600. So it will be 71,200. 71,000. So now less cost of goods sold, cost of sales, cost of sales. So in this, what will be there? So by default, first one is inventory as at 1st Jan. Inventory as at 1st Jan. So how much? 11,000. So 1st Jan 2015, 11,000. Purchases. So how much are purchases? Purchases are 28,440. Then purchase returns are 2144. Two, 1, 4, 4. So what else? Let us check. So carriage inward is there? No, carriage inward is not there. So purchases is over, purchase returns is over. So inventory at 31st December is 9,000. Inventory at 31st December. So even that we have to subtract. So if we add this, so it will be 11,000 plus 28,540 minus 2144 37396. 37396. So minus inventory as at 31st December 2015. So 9,000. So 37,396 minus 9,000, 28,396. 28,396. So this minus this will give you gross profit. Right? So what is the gross profit? Minus 42,804. 42,804. So this is the gross profit. So to this, we have to add other income. So let us see if there is any other income is there. So, okay, so there is no other income. So other income will not come. So if you want, you can just write and leave it blank. Add other income. So when you are learning, you can just write so that you don't forget in the exams. So you miss out and again you have to scat and again you have to do. That will be a lot of waste of power. So on that side, it's better you make a practice of writing this and you write it as 0 because there is no other income. So now less overhead expenses. So what are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating, lighting, advertising. Wages, rent, heating, lighting, advertising. Wages, rent, heating, lighting. So our wages is 3100, 4000, 3100, 4000, 3100, 4000, 4000, 5120, 2400, 2400. Other operating expenses 2010. 2010. Loan interest 50. So totally up 8100 plus 4000 plus 5120 plus 2400 plus 2010 plus 50 will be equal to 16,880. 16,008. So these are all overhead expenses. So minus 42,804. 42,804. So 25,924. 25,924. So what is this? This is nothing but profit for the team. Okay. So this is how you do. So very simple. This was very simple question, very simple topic. But going forward, you will have a lot of adjustments here too. The problems will not be simple. But if you remember the steps, you can just uh, increase the learning speed. So incremental learning. So you can learn, add more concepts into that. So prepare at least income statement for there. Keep your answer. It will be needed again in chapter 8. So the answer you need, so answer whatever you have got is required because next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have got. So profit whatever we have got, we need to add. So that's why that's very much important. So in the balance sheet, we have to reflect it. So that's why it is told. So next one, let us see. This is finished. We have completed one question. So let us see the second question. So the trial balance extracted from Piccolo's books at 31st March 2016 is as follows. Sales 4,000, sales returns 3,600, purchases 1,20,000, 120,000, purchase returns 4,400, purchase returns 4,400, inventory 18,000, carriage inwards 5,000, carriage outwards 3,724, discount received, this is other income 3,060, discount allowed 5,020, wages 36,800, rent 8,000, heating and lighting 6,450, other operating expenses 1,143, fixture and fittings 9,000, office furniture 2,000, trade receivables 1,970, trade credits 2,130, bank balance 24,930, 2,496, drawings 20,527, capital 30,000. So during that, Tekala had taken goods costing 2,000 for his own use. So this will come as a deduction from cost of goods sold. Had not been recorded in the books of in the books. Inventory at 31st December 2016 cost 20,000. Prepare Ticola's income statement for the year ended 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this problem on your own. So if possible, take the screenshot of this question. Take the screenshot of this question and put efforts. Try to do it on your own. And if you don't get this, please let me know in the comment. I will do it. We will do it in the class. So otherwise, it will be assumed that you have understood. Then you have got, you have completed. So then we'll proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we'll do exam practice questions. So please let me know if you have any doubt in this question as a comment. So we'll have a separate class or I will just explain to you whatever doubts you have. So till then, bye bye, bye, good day, good night. So dear friends, welcome back. Welcome back to Shasha's virtual classroom. So today we will discuss exam practice questions from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. So let's discuss this question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then we can continue and just check whether everything has been done correctly or not. So which of the following does not appear in an income statement? So which does not appear? Carriage outward expense will appear. Carriage allowed discount allowed will appear, discount received will appear. So motor vehicles will not appear. So motor vehicles is an asset, so this will not appear. So the following information has been expected from the trial balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000. Closing inventory was 3,000 more than opening inventory. Okay. Closing inventory was 3,000 more than opening inventory. So 1/3 of the wages was charged to cost of sales. 1/3 of this 21,000 into 1/3 is nothing but 3 7 27,000. So a cost of sales in the trading section of income statement. What was the gross profit? So they are given sales. So let us do sales 100,000 less. So this is just working. So we can do here. We don't have to follow the rules like cost of sales or different enough. So this is just to calculate. So if you want, you can just write cost of sales. So opening inventory minus closing inventory is 3,000. It is more, right? So first is opening inventory. So we don't know. So we'll keep it in pending. So purchases 60,000. Purchases 60,000. Wages 7,000 to go in trading account. So that is cost of sales. So wages 7,000. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added and closing inventory will be subtracted. So since the closing inventory is more, so we have to subtract the closing inventory. So closing inventory, so 3,000. So please don't get confused. If the concept is not clear, so you just know this cost of sales is nothing but opening inventory, purchases less purchase returns plus wages minus closing inventory. Okay, so purchases is given, purchase returns are not there, so wages is given. So then opening inventory they are not given. Closing inventory was 3,000 more, so that's why we are subtracting. Okay, so very simple. So since we have to subtract, since it is more, so this is positive, this is negative. So plus minus. So whichever is greater, this is greater. So that's why we are taking 3,000. So it is 67,000 minus 3,000 is 64,000. 64,000 is cost of sales. So therefore the gross profit will be 36,000. Okay. So next. The carriage inwards of business amounted to 6,000 and the carriage outward was 7,000. The carriage outward was charged in trading account. So this is a mistake. So it cannot come in trading account. It not come in trading account of the income statement in error, and the carriage outward was debited in the income statement. Carriage inward was debited in the income statement. Okay, so what is the carriage inward? Carriage inward is 6,000. Carriage outward is 7,000. The carriage inward was charged to trading section in the income statement and the error. So what has happened? Cost of sales difference. The third one, the carriage inward of a business amounted to $6,000 and the carriage outward was 7,000. The carriage outward was charged in trading section of the income statement in error, and then carriage inwards was debited in the income statement. What has been the effect of these errors? So the carriage inwards. Okay, see here. The carriage inward 6,000. Carriage outward is 7,000. So what is the rule? The rule is carriage inward should be considered as part of trading section. So that is called part of cost of sales. But here what has happened? The carriage output was charged in trading section. They should not come. Carriage output was charged in trading section. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So for the profit per year, there won't be any effect. So this is correct, and this is correct. But we have to see. So don't try to answer the question with the trial and error method. So try to understand the question. So work out. Take some minutes. So it's small time, a bit of time. So just to understand this one. So third one. So let's assume sales. Let's assume revenue as 90,000. Let's assume this is just assumption, okay? So less cost of sales. So assume purchases as 40,000. So now what you have to do? Carriage inward is 6,000. Okay, carriage inward is 6,000. So So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 6 is 44,000. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. The correct. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. But what they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage outward. Carriage outward they have taken the 7,000. So what has happened? So this is carriage outward. So 90 minus 40 is 50, 50 minus 7 is 43. The gross profit is showing more or less because of the wrong error. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1,000. See, this is how you have to confirm yourself. See, what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way, and easily they will lose marks. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated the 1000. So now we are double sure. So we have checked the figures and we are double sure. So this is the answer for this. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is, always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question, try, stop the class, stop the video, pause the video, just try to work out the answer on your own, and then you compare with the actual solution, so that you are then only the learning will be more effective. Otherwise, the learning will not be effective, and ultimate result will not, you will not get the ultimate result. Okay, so never do that. So please follow my instructions, so that the purpose should be served. Don't waste time unnecessarily by trial and error methods and all. Okay. So now come to the next one. So let us see this one. Discount received amount to 10,500. Okay. Discount received 10,500. Discount allowed 13,000. So the discount received have been debited. Discount received have been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay. And the discounts allowed have been credited. Discounts allowed should be plus, it's an expense, so it should be debited. So this is wrong. This treatment is wrong. This treatment is wrong. Okay, in the income statement, what has been the effect of errors on the profit for the year? So was understated, overstated, understated, overstated. So don't try to answer this the hinky panky way. So let us see. Let us assume, and we will do the problem. So then the concept will be clear. So fourth one. So fourth. So profit before discount. Okay. This is the correct profit before discount. So let's assume it is 40,000. 40,000, 40,000 in both the cases. Then we'll do the actual treatment. Okay. So we'll do the actual treatment. So we'll deduct discount allowed. Because discount allowed should be deducted, right, from the profit, because it is an expense. So it should deduct. So what is discount allowed? Discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount received? Discount received we have to add, because it is an income. Discount received we have to add because it is an income. What is the discount received? The discount received is 10,500. So this should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,500. See, this is just assumption. Okay, so we are assuming that this is the profit before discount. So this type of problems we have to do this way, so that the understanding is clear, so that we are sure what has happened and what is the effect, net effect. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? They have actually this is the right one. So this is the right one. and this is the wrong one. So what has happened? Wrong one, what they have done? They have deducted 10,500 and they have added 13,000. So then what will be the profit in this case because of the wrong profit? 40,000 minus 10,500 plus 13,000. The profit will be 42,500. 42,500. So it is more. The profit is more. Okay. So it is overstated. It is overstated. Overstated by how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See the concept, you are double sure now, it is double sure, it is certain. There is no hinky panky, like no, you are not trying to guess and write the answer. Never do that, never do that. Okay, so never do that. So the answer is overstated by 5,000. Overstated by 5,000. Okay, so this is how you have to do. What a lot of the students they do because of hurry, because of the exam stress, they will just try to guess and they will ultimately put either of this one and ultimately they will lose marks. What is the purpose? The entire year you have put efforts and because of some small mistake you will lose marks. So please don't do that. So please be careful. So please learn the ways and methods how to actually get the answer. Now, in a trial balance is to 2,300. Carriage inward in a trial balance is 2,300. It has been entered in trading section of the income statement. Again, trading section as 3,200. In addition, motor expenses of 600 has been posted to the motor vans account. What effect has this on the income statement? So again, will not just do it. Will not just try to do blindly. We will just try to analyze by understanding the question carefully. So we'll just do it again here. So again, income statement. So let's assume profit before these treatments is again 90,000. This is right. This is wrong. Okay. So what has been done? Carriage inward in a trial balance is 2,300. Carriage inward is 2,300. But it has been entered in trading section of income statement as 3,200. Wrong treatment. What we have done? We have taken it as 3,200. Okay. Then next one. Motor expenses of 600 has been posted to the motor vans account. So motor expense is a expense. So it should go to reduce the profit. So motor expenses 600. But what they have done? Motor expenses have been posted to the motor vans account. It has gone to motor vans account means it has not been shown in income statement. So it has not been shown in income statement. So now let us see. So what is the right thing? After you should do the right one. So it will be 90,000 minus 2,900. 2,900. 87,100. 87,100. So 90,000 minus 3,200. 86,800. 86,800. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less, no? So it should be more. The profit should be more, but the profit is less. The profit is understated. So what is the profit? It is understated. Understated by how much? 87,100 minus this one is 300. Understated by 300. Understated by carriage in ordinance has been entered into understated by 900. Gross profit, okay. So the profit, okay. So this one, this is overstated by 300. Or understated by 300. Understated by 300. And even gross profit also will be understated by 900. See, gross profit is also understated by here. Gross profit is okay. So we need to find even gross profit also. So my mistake. So we'll just do it again, once again. So please bear with me. So assume profit 90,000. So 90,000. So this is just to find out the gross profit. Okay. So less carriage inward is 2300. 2300, and this has been shown as 3200. So this is just to find gross profit. Okay. So what is the profit? Let us see. So 90,000 minus 2300 is 87,700. So then 90,000 minus 3200, 86,800. So gross profit. So actually gross profit should be more. Here it is showing less. So it is understated again. Understated. Understated by how much? Minus 87,700. 900. Understated by 900. So this one is correct. Understated by 900. This one is correct. This one is correct. So please be double sure. So don't try to guess. Don't try to do the problem without understanding. Never do that. Okay, please never do any problem without understanding. Have a clear-cut understanding of the concept, and please do it, so that each and every mark is very, very important. So please do it. Use my classes very carefully. So please share and subscribe. Let others also help, grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one, that is statement of financial position, in the next class. Till then, have a good day. Good night. Goodbye. Hello, dear students. Welcome to Shasa's virtual classroom. So today we will do a recap of whatever we have learned till now. So basically this is a recap session. So in this lesson we will discuss what all we have done till now. So the first lesson was cash transactions. So in this lesson, we learned how to record cash transactions when payments are made and amounts are received. When amounts are received in received and paid. So that is what is cash transaction. Cash transaction means money is paid to someone and money is received from someone. So how to pass those entries? So that's all we have done. So here in this we have learned all about personal transactions, like when we receive money from accounts, personal accounts, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transactions. In lesson number 2, we learned credit transactions. So what are credit transactions? Credit transactions are those where amounts are not paid, where amounts are not paid or not paid. So or not paid. So that is why it's called credit transaction. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, all other stuff. So we have learned in credit transactions. How to record credit transactions? We have learned in second lesson. So we have done couple of questions. So here also we have done couple of questions. In this also we have done couple of questions. We have discussed a couple of questions. Please go through that. And then again, third, we have learned books of time entry. We have learned about books of time entry. So what are the books of time entry? Sales journal, sales journal, purchase journal, sales return journal, purchase return journal, cash
Hello.
book, general journal,
Hello. Good morning, David.
or just journal. Okay, so what is recorded in sales journal? All sales, all particularly all details of sales, particularly credit sales, are entered in sales journal. Purchase journal, all credit purchases are recorded. Sales return journal returns when customer returns the goods, then whatever entries we make, so that is made in sales return journal. Purchase return journal, we record the purchases, we reject the material and when it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amounts received and paid.
So today we do theory
General
from
cash object.
this one, yeah,
Cash
commercial practice, I mean accounting, okay?
and even discount column also we
Because
have
a
done.
lot of questions you
Discount
had asked
column
no,
also
from
and
there.
discount column. So we have learned how to record entries in sales journal, purchase journal, sales return journal, sales return journal, purchase return journal, cash book, general journal or journal. So what will be entered in general journal? Adjustment entries like outstanding expenses, prepaid expenses, so purchase of non-current assets, like purchase of machinery, purchase of how to rectify entries. So for a non-current assets, entries related to non-current assets, rectification entries. So basically, what all doesn't come, what doesn't come in sales journal, purchase journal, sales return journal, purchase return journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have learned how to write this and all. So then how to post it to the ledger also we have learned how to post to ledger. And again we have learned division of classification of accounts, division or classification of ledger accounts. Ledgers also we have learned. And so in ledger we have learned how to post, how to prepare, all these things we have learned in ledger accounts. So then division or classification of ledgers. So what is the purpose? How many different classifications are there? So all those things we have learned. And we have learned the balancing of ledger accounts. Balancing of ledger accounts. So that is how to do the balancing of ledger account. And problem also comprehensive problem to cover up all these aspects, and we have prepared, ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure or the design of trial balance. All these things we have learned. All this, whatever is there, whatever we have learned, all this is known as bookkeeping. So all this is known as bookkeeping.
Okay, so
till
what do you mean by what is the meaning of accounting?
done by bookkeeper. Or clerk. So after this, the next step starts. So the next step is known as financial accounting. So
See,
the accountant
this
does
one
the
you learn.
financial
An accounting
accounting now.
system is a means of
So
collecting,
he
summarizing,
starts
analyzing, and
financial
reporting
accounting.
in monetary
So
terms,
next lesson,
information about the business,
doing
or
financial
this which
accounting
is easy.
lesson,
Among this, whichever you
like
use,
how to
you can
prepare
learn. So
income
let us
statement,
see
how
if
to
there is
prepare
any other
balance sheet,
dimension.
what are the different. So the main accounts here till here was all basic, but very very important for you to get understanding of accountancy. So now
Accounting is the process of
from the next
identifying,
lesson
measuring,
onwards,
and
we will start
communicating economic information
financial
to permit
accounting.
informed judgments and decisions
Till
by
then,
the users
bye
of
bye.
accountants. Accounting is the art of recording, classifying, and summarizing a significant manner in terms of monetary transactions and events which are in part of at least a financial character and to
Prime
the
means
report.
first,
So
initially.
whichever
So,
is easy. So I
as soon
think
as
this
the
is easy,
transaction happens,
Accounting is
we
the
record
process
in
of
some fields.
identifying,
So,
measuring, and
what are
communicating
the different
economic
types of
information to
transactions we
permit
have?
informed judgments and
So, we sell
decisions by the
goods.
users of accounts.
So, they
You
are
learn
known as
this
sales.
one.
And when goods are returned, when sold goods are returned, they are known as sales return. We purchase goods, it's known as purchases. If the goods are not of good quality, we may return the goods, purchase return. Business even receives and pays cash, even that is recorded. So apart from that, there are a lot of other things which are recorded. So when they happen initially, as soon as they happen, we record at one place one books, certain books, okay, certain books,
certain goods. So we don't write in haphazard way, we write in certain goods. All sales, we record in sales day book or sales register or sales day book. It is also known as sales day book. Similarly, some customers may return the goods, so we record them in sales return register. So when purchases are made, all the purchases are recorded in purchase register. Similarly, if the goods are not of good quality, we may return the goods, so they are recorded in purchase return register. So when amounts are received and paid, receives and pays, when business receives and pays, so it is recorded. So they are recorded in cash. Okay. So summary of receipts and payments, whether cash and bank. It is if you receive by check. So all those will be recorded in bank. So a lot of other entries like purchase of non-current assets. Because purchase of non-current assets are not purchases, right? So it will not come. So purchase of non-current assets. Adjustment entries. All these entries are recorded in a book called General Journal. Journal or so we have to write the specific transactions in specific full picture. We cannot mess up. So the entries cannot be messed up. Okay, so this is the fundamental rule. So in this lesson, we will learn how to record the entries in the books of prime entry. So how will be the books of prime entry? So you can see the books of prime entry will be like this. So the dates will be there, particulars will be there. So date means date, particulars means party's name will be there, from whom to whom we have sold. So obviously customers, name, date will be there, customer's name will be there. So everything will be entered in sales return. So sales return journal again, customer's name will be recorded. So again date, particulars. So particulars, customer's name will be recorded and amount also will be recorded. Similarly, in purchases journal, we record supplier's name. Supplier's name and details of what is the amount of transaction of it. So again, purchase return journal also we record suppliers details. So obviously date will be there, all those things will be mentioned. So this is how the entries we have to enter. So in this specific format, specific what do you say? Order itself we have to write. So we have to write specifically like this. So this is a list. Actually, these are the list: sales journal, sales return journal, purchase return journal, and purchase journal. These are all lists
Okay, so these are all lists of sales return, list of sales purchases, list of purchase return. So everything will be there. So from here, once we write here, so what happens next?
Okay, so now features of accounting. Reveal the following salient features of accounting. So bullet points. Write down the bullet points. Accounting is both art as well as science. First point. Second point is
What happens?
see this one.
There are two
Art as
points.
well as science.
One is sales.
Second point is financial transactions. Third point is recording, classifying, summarizing, analysis, and interpretation. Write on this 1, 2, 3, 4, 5, 6, and done.
So, sales, what we have to do is, we have to add all this, whatever the amount comes, we have to enter in the sales count. We have to enter in sales account. So sales journal is different, sales account is different. Very important. Similarly, sales return journal, whatever the total amount, we have to enter in sales returns account. Total is total. Sales account, total amount, recording, sales returns. So then, purchases. So purchases, total purchases will be entered in purchases account. So purchases account. So again here is total amount. Will be entered in purchase returns account. So this total will be entered. So the supplier's names. So the details of, suppose this is Mr. A, Mr. B, Mr. C. It will be posted to the respective ledger accounts. Let us say here, customer, say Z, Y, S. So suppose these are the customers. So we have to transfer, we have to make the entries, corresponding entries in Z's ledger account, Y's ledger account, X's ledger account, B's ledger account, respectively. So separately we have to record, but total of sales we have to record to sales account. Only one. So aggregate. So aggregate will be recorded in no individual. Okay, no individual. Should not record individual entries again in sales account. The total of sales journal will be recorded in sales account, whereas customers accounts will be independently recorded in the respective customers. The same rule applies for even for sales returns, purchase return. So remember, sales journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or purchases account or purchase returns account. Aggregate will be recorded and individual entries will be posted to individual accounts. So then
So remember, this is very important point. So often asked in MCQs, so you have to be very clear for this. So then, similarly, sales register, sales return register versus sales returns account. So both are different. So then, cash. So we have discussed the sales register, sales return register, purchases return register. So when we receive and pay, we record in cash book.
Okay.
Cash and bank columns will be there. So cash book. So the format is see, cash book we have to record in this way. So cash book will be divided is
Tell me the list here.
parts. So debit card
You learned
and credit card. So in debit card date
Did you
particulars
learn the list?
from whom the cash has been received, folio,
Okay, tell me the list.
number, discount. So there is one column for discount also. So when we receive money, we may allow some discount. So that discount will be recorded here. When we receive
How
cash,
many? 6 things, no? 6
checks recorded. Yeah. Similarly, date,
correct.
folio, discount. So when we make the payment, we may receive some discount. So we record the discount here. When we pay by cash, if we pay by cash, we record here. If we pay by check, we write it in bank column. So very important this particular format. So very important question.
No, you should come in an order.
Often asked
Okay. Because that will flow in an order.
Exams.
You have to tell it in the
IGCSE. So cash book very easy one. So just you have to remember the format and just put in the.
You have to tell in this specific order.
So very simple, very
so
easy.
art as well as science, financial transactions, recording, classifying, summarizing, analysis and interpretation. So first this, then this. So first this will happen, then this will happen, then this will happen, then this will happen. It is like that. These are all interlinked. This is the first step, second step, third step, fourth step. This is just meaning. This is just meaning what they are doing. So art as well as science. So what do you mean by art as well as science? Art is you do it. However you do it is up to you. It is like that. Art means like that. What is science? Science says you have to do it in that specific order. You have to do it in that specific order only. Like this only you have to write. You have to write it in this format. You have to write in this order only. So that one. Financial transactions. So only financial transactions will be recorded. Whatever is the measurable in terms of money. So and that too business transactions. Only business transactions should be recorded. Only finance, which is measurable in terms of money. Recording. It should be recorded. First you have to write it down. Then you have to classify. Classify means you have to write it separately, each group separately you have to write. Then you have to write summarize. Summarize means then you have to prepare one abstract. Then based on that you have to give your recommendations. That is the meaning. Okay. So
because we just need to know how to record it and how to post it. So until then, bye bye.
In elaborating, you have to write on your in your own. See, accounting, art as well as science. Accounting is both an art and a science. It is the art of correctly recording the day-to-day business transactions. However you record, it is up to you, but you have to record that. So it is a science of maintaining business records in a regular and proper manner, so as to obtain them business results easily and correctly. Accounting is a science because it's maintained according to some fundamental principles. It is an art because the records are designed to suit the particular requirements. Some experts are of the opinion that accounting is a science as it consists of a body of knowledge in the form of principles, assumptions, and concepts. The art of recording, classifying, and analyzing financial is called accountancy. Okay. So, however, the two terms accounting and accountancy are used interchangeably. So, that is also, this is the meaning of art and this is the meaning of science. Understood? Okay. So, you have to tell me in this order itself. So, first is art as well as science, second one is recording. So, what is recording? No, what is second one? Financial transaction. So, let us see what is financial transaction. Financial transactions. See, accounting records transactions and events of financial nature only. If a transaction cannot be measured in terms of money, it will not be recorded. Okay. So, for example, a conflict between production department and sales department affect, but it will not be recorded. So, accounting about transactions, events, financial nature only. Only whatever is in terms of money, only it can be recorded. If the transaction cannot be measured in terms of money, it will not be recorded. Then next one. Recording. Accounting involves recording of business transactions in a systematic manner. Recording is done in various subsidiary books such as cash book, purchase book, sales book, purchase return book, sales return book. The number of subsidiary books are to be kept depending upon nature and size of business. So recording should be recording of business transactions in a systematic manner. Recording is done in various subsidiary books. It means lot of books will be there in that you have to write. So classifying. Classifying means the process of grouping the entries of transactions of one nature at one place. This is done by opening accounts in a book called ledger, which contain all the accounts of the firm. Similar transactions relating to particular account for a given period are recorded at one place in the ledger. Okay, then summarizing. What is summarizing? Summarizing is process of presenting the classified data in a manner useful to the users of accounts. This involves preparing the final accounts in the form of trading account, profit and loss, and balance sheet. Then interpretation means based on that the result will be what is the profit, what is the loss, why it has happened, so all those things. Okay, so summarizing it means the process of presenting the classified data in a manner useful to the users of account. This involves preparing the final accounts in the terms of uh, uh, the accounting statements analyzed with the help of ratios such as such analysis help the management analyze the performance and financial position of the business. Okay, so you have to learn it in a specific order. It's very important. Now, meaning of bookkeeping. So, what is bookkeeping? Bookkeeping is the art of recording in books of account monetary as we know. The art of recording business transactions. So whichever is best, whichever is easy, you learn it. So first one itself is easy, no? See the first
So
one.
rules to remember. So a business normally deals with persons, whether natural or
Bodily by whatever bodily
so
by
when we
has
deal
to.
with any person,
So what does it say? Keeping
then
book
there
is
must
the
be
art
some
of
records.
recording business
So
dealings
either
in
we
set of
receive
books. This
from
is
them
easy.
or we pay, or the business will either receive
First
or
one is
pay
easy, no?
or give to
So what is the
the other person.
definition of
So the
bookkeeping? So
rule is
you have
debit
tried,
the
you have to
account
tell
that
it is
receives
online. Bookkeeping is the art of recording business dealings in a set
or
of
debit
books.
the receiver. Debit the receiver. So some
And you have to write the
right
author's name also.
this
Who
way.
is
So
according to
debit the
whom?
account that
According to
receives.
J.R. Bartley
So
Boy.
like
Okay,
David
bookkeeping is the art
Hopkins
of
wrote
recording
the
business
the
dealings in a
first
set of books. J.R. Bartley
that
Boy.
is
That's all.
debit the account that receives. Right?
You can write any definition.
So
One
some
definition
other
you may
options
have
they
written.
write
So if they ask, it will be for 1 mark or
similarly
something
for
like that. So you can just
credit the items they write
you
credit
just
the
learn this.
account that
Our
gives
bookkeeping is the
or
art of
credit the
recording
gift.
business
So
dealings.
some others write that one way or the other. So the rule is ultimately the same. I mean the concept is ultimately the same. Real account debit what is being received. So in case of real account, when you receive or pay something, when a business receives or pays something, so then debit what is being received or debit what comes in. So credit what is being given away or credit what goes out. So this is the rule for real accounts. So you know what is real accounts. So when we deal with cash or bank or something. So nominal account, the rule is debit all expenses and losses, credit all incomes and gains. So nominal accounts are expenses and incomes, right? So accounting equation. So when we are recording accounting equation from the accounting point of view, when we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have debit balances. So remember, assets and expenses normally are debit balances. Okay, so liabilities and incomes are normally credit balances. So even if you know, it is noteworthy that capital is also a liability. So it means capital liabilities and incomes are normally credit balances.
Hey, remember, I'm a trainer, not a tutor.
Distinction
train
between
you
bookkeeping and
to pass,
accounting.
to
This
succeed,
is important.
to clear your exams, to get better marks, to excel in your studies,
1, 2, 3,
so that you
4,
understand
5,
and
6.
do better, better and better and best, the best. Since 2K I have been taking on
6
one
points.
classes, I'm aware of difficulties faced by various students, below average,
Okay,
above
come on,
average.
learn this with me first.
I analyze and understand what they don't really understand and how
Distinction
the
between
students are
bookkeeping and
learning.
accounting. Write down this basis of distinction. First one is nature, then is scope, then is stage,
I feel the
then
person
results, then basis, then
try
authority
to
level.
understand their
So if you
difficulties.
remember this, the second bookkeeping and accounting
Making
part,
the
you can
student
just learn
understand
and
the
you can
subject
write
and
on your own. Okay, so but you have to learn these points
making
because
it
they are
necessary
very
for them to
important.
learn.
So the
They excel
questions
in
can
their
be based on this.
studies is my
So
core
definitely
perspective.
questions will be asked on this.
These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam-oriented crash courses and exam-oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense, because any subject is more a common sense than a subject. So a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease, without any difficulties, may please get in touch with me. I am available anytime for them. 24/7, I am available for them. Thank you. Sharing is caring. So please subscribe, share to my channel, because spreading knowledge only increases your knowledge.
So, dear friends, welcome back. Let us continue with activity 7.2. So, Vikram is a sole trader who buys and sells goods, the trial balance. So, this is a question from statement of profit or loss. So, we need to prepare a statement of profit or loss. This is David Hopkins' latest book. So, applicable for 2025-26. So, we'll continue. Okay. So, let us just so check out the items whatever are there. So before starting this, so let's have a recap of how the statement of profit or loss is prepared. So first, what are the line items? So statement heading, always we have tried the heading. So always, but sometimes it is given in the question paper itself. So anyways, we will just write down statement of profit or loss, whatever the trader's name and the period and all, or year or whatever. So what are the line items? So first one, it is revenue. So revenue is nothing but sales minus sales returns. So minus cost of sales. So cost of sales. So you know what is cost of sales? So opening inventory plus purchases minus purchase returns plus carriage inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income will come here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are taken out. So that will give profit or loss. So in just 5 steps, so very important. So learn this because often the questions are asked in AS level. Lot of questions are asked on income statements. So that's why we have been repeating this concept again and again. Like what are the steps and what are the contents. So it's very important. Okay. So now let us just have a look at the question. So carriage inwards. So this is forming cost of sales. This is forming part of cost of sales. So carriage outwards is expenses. So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales.
Okay, tell me here.
Motor expenses. Purchases cost of sales. Purchase returns cost of sales. We have to subtract.
Okay, tell me.
So rent and rates expenses. Sales revenue. Sales returns revenue. Wages and salaries expenses. So inventory at 31st March was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should you should visualize where these items will come. So you should visualize where these items will come, so that when you're doing the problem, you're doing it like a bullet train. So very fast. You should be very fast because the questions will be very tricky sometimes. They will be very somewhat lengthy. If not one question, some other questions may be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay. So that is, remember this, it's very, very important. So now let us continue to
Okay.
just, so what is there? First, revenue. There are two items. So sales and sales returns. So that is what is in revenue. Revenue, it is sales and sales returns. So how much it is?
So then objectives of
Sales and sales returns is 354,987.
Okay. So objectives of accounting. So I think in last exam this question had come, last test. Objectives of accounting. What are the objectives of accounting? To maintain
So you need
records
to
of
write this.
business.
What
You
is
written somewhere,
so
no?
it is
This
sales.
one.
So this is sales returns.
Objectives of accounting. Is that with you or no?
So that will give you
Okay, write down. Write down.
354,987.
So how many here are there? So, 4. To maintain records of business, calculation of profit and loss, depiction of financial position, to make the information available to various groups and users. 1, 2, 3, 4. Wait on.
Three five one zero zero two. Okay. So okay. So let us do it in a proper way. So that, I don't want you to follow the same thing when you're writing. So let me just write it again in a proper format. So see, accounting as a subject is a presentation, more concerned about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that each and every concept is explained to the examiner. So first of all, we have tried the ending statement of profit or loss. So in the exams, they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. That's all. So if it is written, you don't have to write it. So first, we have to start with revenue. So revenue, under revenue, we'll have sales minus sales returns. So this is
Okay.
okay. Next, always write the dollars currency in. Always you have to write. Don't forget to write this.
Tell me.
So revenue. So on the top, if you write, it is
What
applicable.
are the
So you
objectives
don't
of
have to write
accounting?
everywhere again. So minus cost of sales. So what all is coming in cost of sales? Purchases. So below that, you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, by heart, whatever. So always.
So now advantages of accounting.
You have
This
to
one, no? This one, advantages. 8
write it
advantages
in a
are there.
proper
Write down them.
sequence. Okay, so always. So inventory.
Advantages of
What they have
accounting.
given here,
So
inventory at 1st April 2019. Inventory at 1st April 2019. Write the same line item, whatever they have written.
dude,
See, what I advise you is,
you can
as
see
soon
on
as you
here
see
it's
the
the
question, you
advantages
can
of
try
accounting.
answering
You
the
can see
question
on
on
the
your own,
screen.
and then you can cross check with the solution here, so that you can answer. You can be sure
You
that
don't have it.
whatever
They
you
have
are
taken
writing
it
right,
out.
so that it will increase your confidence. It will
It
boost
must
your
be there.
confidence,
Check.
and it will help you prepare for examination
Okay,
with lot of
it's not
comforts.
there.
Okay, so first you try on your own,
So
then only you check
limitations of
this.
accounting is
Don't
there.
see
No,
this
no.
as a movie.
or as a video or
Okay.
something like that. So please try to work out the question on your own, and then you have to have a look at this. This will be more effective. So learning should be more effective.
I
So
think even this will be
it
better.
should be with fun also, but it should be more effective as well. So try to answer the question on your own, and then you cross check
Real
with this
personal, real
solution whether you
normal.
understood every concept, everything is clear or what. Okay. So inventory at 1st April 2019,
cash system, mercantile system, this is done.
34096. 34096. Okay, then purchases. To that we need to add purchases. What are the purchases?
Do you have advantages of double entry system? Just check.
245,110.
Okay.
So
And
from
right
this
on
we
this
need to
one.
subtract purchase
Scientific
returns.
system, complete record, check on accuracy, asset admit of profit or loss.
What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620.
You don't have it, huh?
So to this we need to add carriage inwards. Because when we purchase, we get the goods inside. So by default, carriage inwards 2305.
No, that's what. No, this is the advantages of double entry only. No, so this one, see. You see here, double entry system offers the following advantages. Scientific
Normally these are
system,
the line
complete
items
record.
normally. Okay, purchases.
Same, no?
purchase
Your
returns,
book also is
carriage
the same,
inwards.
no?
So from that we need to subtract inventory on 31st March. Inventory on 31st March 20.
Okay, so
leave it
then.
it's given in adjustments. Always closing
That
inventory
is not so
is given
important.
in adjustments. 29143. Always. So put it in bracket so that you don't mess up again. A lot of students they mess up doing calculations if they don't if you don't put the numbers minus or
I
something
think
like
that's all you have in that
you
lesson.
will just
You have any other thing from the
make
lesson?
wrong
Just
calculations and ultimately the figure will go wrong. So you'll lose marks. So very important 34096
that is easy only.
plus 24910 minus 562050 plus 2305 minus 29143. 246748. So the expenses total amount is 246748. So cost of sales are subtracted. So you put it in bracket again. This minus is for these items. Okay. So don't get confused again. So 104254. 104.
This chapter is almost done. Yeah.
54. So this is, what do we call this? This is gross profit, correct? No? So gross profit. So this is gross profit. Okay. So this is gross profit. So this is how it is. So to this we need to add other income. So this is a comprehensive question. So all items have again, this is a very good question for practice. Okay. So this is very good question for practice. Try to practice this to learn the line items so that all the line items are included in this. So it will be easier for you. So you kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times to practice so that the concept is clear and so that you don't miss out any line item.
So yes, obviously there will be adjustments, lot of adjustments also will be there. So that is another thing, another part, but this
Okay,
is
so
the
you learn
starting
this
point.
point,
So always
meaning
you have to start with
accounting
this, then
principles.
you have
Accounting
to
principles refers to
incorporate the
concepts,
adjustments,
convention,
whatever.
and
So
standards which are widely
the
accepted
format is
by
will be the
accountants.
same.
So this had
So
come in
only you
a
have to
previous
incorporate the
exam.
adjustments. Okay. So practice
Okay.
this question. This is very good question because lot
First
of
paragraph, this meaning of
line
accounting
items are there.
principles. What do you mean by
Discount
accounting
allowed. So
principles?
exhaustive line
Or
items are there.
define
So
accounting principles?
discount
What?
discount received. So this is other income. So this is other income. Discount received. 2067. Discount received. So you add this. So this will give you one amount. So we don't know the name of that amount. 2067. 106321. So from this we need to take out expenses. So what are the expenses? Carriage outward 1, 2, 3, 4.
Write down 101. It's important. This will again come in 11th and again it will come in degree also. It's very important.
Discount allowed 1888. Heat and light 3765. Insurance 4760. Motor expenses 5269. Rent and rates 14,400. So that's all. So these are the expenses. Okay. So these are the only expenses, nothing else. So how many line items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15. Let us just check if you have taken everything. So 1, 2, 3, 4, 5, 6, 7.
Okay. You wrote the or you learned? Okay, learn it. So another 2-3 minutes are there, learn it and we'll just close it.
12, 13, 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 line items. Is it correct? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So what we have left? Rent and rates, carriage inward, carriage outward, discount allowed, discount received, heat and light. Heat and light is 765. Heat and light. And it is here taken.
motor expenses 5269. Student motor expenses also. So let us cross check. So let us check line by line item. So how to cross check? Sales. Sales. Sales return. Sales return. So you need to learn even how to cross check sometimes.
Done.
Okay. So we have to
Okay,
cross check.
so we'll
Otherwise,
continue tomorrow.
simply
I
just
mean,
for the matter of 1
tomorrow,
minute,
next
you will
week,
lose
Monday.
a lot of
Okay.
marks. Even 1 mark is very
Okay, tomorrow
is
is
of high
Friday, no?
importance. So don't be in a hurry.
Okay.
Don't try
So
to
4 days
mess
left
up.
for
So
today,
wages and
Monday
salaries we have
to.
taken 67109 general
Next week you will be having Ganesha festival, no? From when you have Ganesh festival?
See, we have not taken wages and
I think
salaries.
Thursday onwards, I think.
So
Thursday is
this will
Gauri
get
and
it.
Friday is Ganesha. So next week we can have on Monday, Tuesday, Wednesday, 3 days. Okay.
So we don't have to. Now we don't have to. Okay. So now we don't have to verify because we have already done it. So we found out wages and salaries. There are 15 line items, right? So we have got all the 15 line items. 67109. 67109. So we have taken all the 15 items. So that is how we have to check. Okay. So when we have to cross check, we have to put the ticks like that, and then we have to cross check. So be careful. So 1, 2, 3, 4 plus 1,888 plus 3,765 plus 4,760 plus 5,265 9 plus 14,400 plus 6,700 98425. So 984. So when we subtract this from this, 7896. 7896 profit. Okay, this is the answer 7896. This is how it is. So we have finished activity 7.2. So you can just have a recap like statement of profit was I always write the heading. So revenue, sales minus sales returns. So write the items like this: cost of sales, inventory, purchases, purchase returns, carriage inwards, inventory at the end. So write down everything, then you get one figure. So this minus this will get gross profit. To that you add other income, you will get one value. From that you subtract all the other expenses, so you take out all the expenses, you add all this, I put it here. So because it is minus, you have put it in bracket. This minus this will give profit. This is done. Okay. So this is how it is. So now we can. So this is the end of activity question 7.2. Activity 7.2. We will catch up in the next class. Till then, have a good day. Goodbye. Dear friends, welcome back to Shasha's virtual classroom. So activity 7.3, produce a statement of profit loss for Samara that shows the gross profit and profit and loss for the year. Samara, who is this Samara? Just let us have a look. It must be somewhere here. So a trial balance has been prepared for Samara. So see, okay. So this is the one. So a seller of women's clothing at 30th April 2020. Okay. So rent and rates is given. So here in the question they have given everything like this is an expense, this is asset. Asset will go to statement of financial position. Revenue is given. This is other revenue, discount received. Okay. So this is other income. So this will go to other income. So then carriage outwards expense, sales revenue, inventory, 1st April 2019, 1st May 2019. So is there anything new in this? So inventory at 1st May 2019, electricity, sales return, commission received, purchase returns, discount allowed, purchases, trade receivables, wages, drawings will not come. So that will go to statement of financial position. So motor expenses blank. So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just finish. You can cross check with the solutions. So this is very important topic. That's why I am doing this. So let us continue. Okay. So we'll start with income statement, statement of profit or loss. So first revenue and the sales. So this sales. $40,800. $40,800. This returns. $320. So this minus this. Less cost of sales. Opening inventory on 1st May. $2,100. Purchases. $22,600. Receive there are purchase returns. Yes, purchase returns are also there. much? 10. So carriage inwards. Inventory also you have taken. Let's check if carriage inward is there. Carriage inward. Carriage inward is there. Yes. Carefully you have to see. Don't miss out any item. Inventory 30th April. Closing inventory we have to subtract. So 3760. Two 0 650. So that will give 19830. Yes. So this will give you, this is gross profit. What is it is? Gross profit. This is gross profit. So this we add other income. So what is other income? Commission received. Discount received. Discount received. Commission received. How much is discount received? 50. Commission received, discount received, commission received. 50, 2340. Commission received 2340. Commission received 2340. Okay, correct. So this place, this is 2390. So you have to add here 2390. So this will give this plus this. Equal to 22,220. So this is profit plus gross profit plus other income. So there is no name for this particular line item. So forget it. Then expenses. We have to take out expenses. What are the expenses? So let us write all the expenses one by one. from the beginning. Rent and rates 480. Carriage outward 310. Electricity 1180. 1180 electricity. Discount allowed 60. Wages 9700. Motor expenses 660. So now you add all these expenses. 480 plus 310 plus 11 plus 9700 plus 6 12390 12390. So 20 to 20 to 20 minus 12390 will give 9830. This is profit. This is profit. So remember, so this is that's all. So very simple question. So let us take a picture of the profit because we need it in the next activity. They have asked for the same activity. They have asked you to prepare statement of financial position. So take down the number 9830. You keep it securely. Safely means just remember it. And anyways, if you are doing it in a notebook, then it will always be there. So you can have just check and you can use it. So, okay, so this is how it is. So just let's once again you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own, then you cross check with the solution. So the same way we will be even doing the question papers also, like you will have to try on your own and then you have to cross check. So possibly we may discuss lot of concepts. We will, if you have a look at all of my, if you attend all my virtual classrooms, obviously it will be full-fledged discussion on various topics, including question papers, whether it is A levels, AS levels, even IGCSE also. So please refer my channel to your friends and relatives whoever are studying in A levels, IGCSE, so that it will be helpful for you, and vis-a-vis it will be motivation for me as well. So thank you. So you can just finish this, just have a look. So let me know if you have any concerns, if you have any doubts or anything like that in the comment section of this video, so that if there are any errors also, please let me know, because even I am a human, and there are chances that you human beings only commit mistakes, so that I can rectify my mistakes, and it will help other your fellow students also. So this is my humble request to you, all of my friends, my students. So this is the end of activity 7.3. So activity 7.3. So see you in the next class. Till then, have a good day, good night, all the best. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss exam style questions. So similar questions are asked in AS level MCQ paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense in the statement of profit or loss? Yeah, delivery cost is an expense, discount allowed is an expense, insurance is an expense, drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes. Carriage outward is not included, discount allowed is not included, discount received is not included. So the initial profit for the year in the statement of profit or loss is 17,500. However, a number of items have been omitted. So these all items have been omitted. So 1800 is this carriage inward. So discount received is 6200. Sales return is 4100. So which are the minus items? So carriage inward will, so loss, the initial profit. Okay, so initial profit. So there is a profit. So profit is 17,500. 17,500 is the profit. So carriage inward is 1800. So it is an expense. Whether it is a forming cost of sales or expenses, it is always an expense. So that will go to reduce the profit. So it will reduce the profit 1800. So discount received. Discount received is other income. So which increases. So increases the profit. Sales returns. Sales return is reverse of revenue, that is minus sales. So this will decrease the profit. So just let us just calculate. 17,500 minus 1800 plus 6200 minus 4100. So 17,800. 17,800, yes. See it. This is the answer. So then after this, you have a trial balance. I mean, the trial balance extracted from is week's 31st March. So let us just discuss this. So I'm not going to work out this. I think you can work out this on your own. What is it asked here? So during the taken goods costing 2775 for his own use. So this one you have to subtract from purchases minus this. This has not been recorded in the books. Okay, inventory at 31st March was 813. Okay. So this you have to subtract. Then let us see what are the other items. Bank, this will go to statement of financial position. Bank loan will go to statement of financial position. Capital will go to statement of financial position. Carriage inwards, so it is cost of sales. Carriage outwards, expenses. Discount allowed, expenses. Discount received, other income. So drawings, statement of financial position. Fixtures and fittings, statement of financial position. Heating and lighting, expenses. Inventory, so this is cost of sales. The land and building, financial position, expenses, office expenses, expenses. Office furniture will go to statement of financial position. Trade payables will go to statement of financial position. Trade purchases will go to cost of sales. Purchase returns, cost of sales. So trade receivables will go to statement of financial position. Revenue, sales is nothing but sales minus sales returns. So this is nothing but revenue. So this should be subtracted from revenue. Wages is expenses. Again, closing inventory will go to cost of sales. So that's all. So now you can try this question on your own. So if you have any doubts, you can please let me know in the comment section. So it's very simple, you can do, because we have to do a lot of stuff. So I'm not wasting time on doing this, because it is a very simple question. I think you can do this on your own. Okay, so this is the end of lesson statement of profit or loss. So we will be continuing the statement of financial position in the next class. Till then, have a good day, good night, take care.
For international curriculum like IGCSE, O levels, AS levels, and A levels, clear understanding of the concepts, remember, correlate, application skills is a must. Proper practice and training is very prerequisite for scoring A plus.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. Everything I do so instinctive and so passionate. Every word I move so descriptive like an adjective. I got a vendetta against people who patent it. Being negative, you should be getting after it. I got facts over tracks, and that's getting slow, speaking fast. I can roast, I can gas, think I'm okay and last, but I don't know if that can erase all the past and the pettiness. A reflection of the emptiness, hilarious. You think you're worth my time, you're delirious, mysterious, because you are behind a fake exterior, inferior.
Dear friends, welcome back. So today we'll be discussing accounting concepts. So this is lesson number 9 in David Hopkins. Lesson number 9 in David Hopkins. Okay. So you can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand the concepts. So you need to understand the concepts. You can just read the book and you can understand, but let me have a brief overview, that's all. So the need for rules. What is the need for rules? So rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person is telling about their financial position, financial results. So everyone in the world should be able to understand the statements prepared by any part of the country or any part of the world. So that is why we have to follow certain rules. So the rules are followed uniformly. So accounting concepts. So accounting concepts are again the same thing. Like some criteria is mandatory to be followed in preparation of books of accounts. So that is what is accounting concepts. What is duality? Duality means, duality says, according to duality, every debit has a credit. So it acts like a check. It acts like a check on the arithmetical accuracy, and try to be more authentic and clean. Okay. So business entity concept. What is business entity concept? According to business entity concept, even though the owner of the business is the person who is running the business, he is considered as an outsider. So that is why the concept of capital and drawings come. Capital and drawings. That is why the concept of capital and drawings come. So similarly, all the transactions from the recorded from the business point of view. So that is what business entity concept says. Money measurement concept. So what is money measurement concept? According to money measurement concept, everything should be measurable in terms of money. All the business transactions should be measurable in terms of money. It cannot be recorded in kind. It cannot be recorded. No transaction can be recorded in quantitative or qualitative terms. It should be always measured in terms of money. So money means either in dollars or pounds or whatever. So historic cost. So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at the price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the books of accounts. So what is realization concept say? Realization concept says, as soon as a sale is made and once an invoice is raised, it should be recorded as revenue. It should be recorded as revenue. But in case of goods sold on approval, goods on sale or approval. So what happens is, it should be recorded as, the goods must be recorded as sale only when. So what is goods on sale or approval? What is goods on sale or approval? So what happens is, a person sends goods to another person on the condition that if the customer agrees, yes, the goods are of proper value, I have accepted, then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer, the goods go out, and he will receive the goods. Entries are made in the stock book, but it will not be recorded as sale. So it should be recorded as sale only when the customer gives his consent, approval. Customer gives his consent or approval. So then only it will be considered as sale. Otherwise, it will not be considered as sale. It will be considered as goods in transit. Okay. So it should not be considered as sale itself. Goods on sale or approval. Consistency. What is consistency? See, there are certain rules, certain principles which the accountant follows. Suppose, let us say there are two methods of providing depreciation. One is straight line method and in one is written down value method. So what does the rule say? If one person follows, if the company follows straight line method, he should be following straight line method several years, throughout the years. He cannot shift from straight line method to written down value method or from written down value method to straight line method. Or when you come to management and cost and management, there you will come with something across FIFO, AVCO. Method of valuation of material. So if one company is following FIFO method, he should be following FIFO method. He cannot interchange to AVCO or vice versa. So they should be consistent in following the accounting principles. If they are following FIFO method in valuing inventory, they should follow FIFO method in valuing inventory. Suppose if they are following AVCO method, they will be following AVCO method of valuation of inventory. So it should be consistently followed. The rules must be consistently followed. Rules or methods. Methods must be consistently followed. So what is materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But because if it is a small company, then small items are also can be recorded as assets. So based on what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called materiality, how material the particular item is. Based on that, the transactions should be recorded. Matching principle. So this is also known as accrual principle. So matching principle means all the assets and liabilities, all incomes and expenses must be belonging to one specific period. So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period in recording one from one period to another period. They should match specific period. Specific period is very important. So periodicity. So a specific period, they should match all assets, liabilities, expenses and incomes should match for the specific period. If they are not belonging to that period, they should be taken out, that's all. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless they are realized. So prudence concept. So it is also known as conservatism concept. So it is known as prudential concept. So according to that, all probable or prospective items, if there are expenses or losses, they should be accounted. They should be considered and recorded in the books of accounts. Whereas if the items are incomes, all probable incomes, they should never be recorded unless otherwise they are realized. Going concern. What does going concern concept say? According to going concern concept, it is normally assumed that business will be continued forever. Business will be considered as running forever. Suppose if you say you will run the business for only 1 year, who will come and buy goods from you? Who will sell goods to you? No one will trade with you. So they will hesitate. What if you run away the other day? So that is why it is always assumed that all businesses are going concern, means they run, they are intended, they have been started with an intention to continue forever. Okay, very important concept. So often asked in the exams. So all these concepts are theory based concepts, but they are often asked. So you have to understand in layman terms, because when they ask in case studies or MCQs, you should be able to tell the answer. Substance over form. So what is substance over form? Like where you can say hire purchase. What happens in hire purchase? Unless you pay the last installment, the buyer will not become the owner. But in our accounts, what we do, from the day one, we consider them as assets and we record and we even charge the depreciation. So here, the legal form is that, legal substance is that the asset has not been transferred from the buyer to the seller, but in the form it has become an asset to the of the seller. So the seller record them and they even charge depreciation and they show it as an asset in their books of accounts. But substance is that, but form is actually something else. So that is what it is. So then objectivity. What is objectivity? All transactions must be evidence. There should not be any bias. There should not be any bias. So there should be proof for every business transaction. There should be evidence, proof or evidence for every business transaction. So it's very important. So that is how it is. So understand. So you can read the book. You can read the text based on this. So try to understand in layman terms how it is, what it is. So a lot of questions are often asked regularly on these concepts, so that particularly MCQs, case studies. So they are asked. So you should these basic concepts. They are very important. Theory, but very important. Please go through. So in the next class, we'll discuss exam style questions from this lesson. So the concept will be more clearer to you. So till then, have a good day. Dear friends, exam style questions from counting concepts. Okay, so let's discuss exam sales to questions from accounting concepts. The owner of a business paid for some repairs made on his wife's car out of the business bank account. The amount was debited to his drawings account. Which concept was applied? Obviously, business entity concept. So according to business entity concept, the owner is considered as an outsider. That's why whatever money is taken out from the business is considered as his drawings. It is recorded from there. So not matching, not proving, not this. So this is the right answer. So business entity concept. A trader paid $700 for business insurance, but 100 out of this related to first 2 months of next year. Which accounting concept has been applied? So obviously matching concept. Why matching concept? Because we have to, the expenses and incomes of that period should match. It should be related to that specific period. So next year, 2 months of the next year should never be accounted. So you should account only the expenses of that particular period. So this is correct. So matching principle has been applied. Matching concept has been applied. So next. The balances in sales ledger total 24,000. A customer who owes $1,500 is known to be in severe financial difficulties and may go out of business. The figure of trade receivables shown in the statement of financial position is 22,500. So you have recorded probable loss, prospective loss. So you have applied prudence concept. Because you have prudential, so you are conservative, so you are prudential. You have followed prudence concept. Okay. So a trader sends goods on sale or return to a customer. When the trader prepares her statement of financial position, the customer has still not indicated that she has accepted the goods. Which concept should be a trader while she prepares her account? So realization concept. So realization concept is applicable because realization concept says that when the goods are sent on return on approval, it should not be recorded as sales unless the person to whom the goods have been sent indicates his assent to buy. So assent. To buy. So that is why it is called realization concept. So realization concept is applied. So this is the end of, see, it's how so simple, so easy concept, but very important. The questions are often asked in AS level, so very important topic. So very easy also. So easily it's scoring. So please, I get a hold of this. Try to answer more and more questions and get a hold of this. Okay. So let's catch up in the next class. Till then, have a good day. Good night. So dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing exam style questions from Statement of Financial Position, David Hopkins' latest book. So you can just answer yourself and then cross check with the solutions here. So the owner of a business has taken goods for her own use. She has withdrawn, but no entry has been made in the books to record this. Which row will show the effect of this? Which row will show effect of this on the statement of financial position? So she has taken drawings, she has taken goods, but it has not been entered. So what will happen? So inventory will be showing more. So it is not possible. This cannot be, this cannot be, this cannot be, this can be, and this can be. So because you have taken out the inventory and you have not shown, so it will be showing more. So what will happen on the credit side? I mean, the other effect, the capital you should have credited the capital. You should have taken out from the capital. So it is impossible that it cannot have any effect on capital. It will be too large. So obviously, yes, capital will be too large because it would not have been debited. So this is the option. D is the answer. The following information has been extracted from a statement of financial position at 31st March 2020. So what was the balance on the capital account at 31st March 2020? So they are given non-current assets, current assets. So what is the total assets? Add up this. So any other assets are there? Current liability is a liability, long-term loan is a liability, profit. So will come in the capital. So drawings also will come in the capital. Profit will obviously credit itself. Drawings will be obviously minus figure, right? So it would have been subtracted. So this you add both 1275 plus 54,275 plus 54. So the total assets is 3,29,000. So the total liability should be equal to this. So this should be the so assets will be equal to liability. So you know in accounting equation, assets is equal to liabilities plus capital. So you know assets. So assets are 329,000. So 329,000 is equal to liabilities plus capital. Liabilities is what? This and these are liabilities. 28,000 plus 67,000. 28,000 plus 67,000. So 95,000. So 95,000. So plus capital. Capital is not given. So it is balancing figure. But they have given other items. So they have given, this is eliminated, only these two are given. So 31,000 minus 42,000. So it is 9,000. 11,000 minus 11,000. So here it is minus 11,000. So minus 11,000 plus x, some amount. Okay, so there is some amount which is x. So you need to simplify. So what you will do, you take this side. So 3,29,000 minus 95,000 is 3,29,000 minus 95 is 234,000. 234,000. So this, you can take out this also, this side minus 11,000. This is already minus, so it will become plus. This is already minus, no? Minus 11,000, right? Because it is drawings. Minus 11,000, you have put it in bracket, right? So this will become plus when this comes this side. So basic maths, if you are bad in basic maths, so I can just show you here. Assets is equal to liabilities plus capital. So assets is 329,000. 329,000 is equal to liabilities. Liabilities is this plus this 95,000. 95,000 plus capital, we don't know, so we can keep it as it is capital. We write it as capital itself. So now 3,329,000 minus 95,000 is equal to capital. So 329,000 minus 95,000 is 234,000. 234,000 is equal to capital. But in capital, this includes one figure. This is what all is here. This side 31,000 minus 42,000. See, opening capital plus profit minus drawings. Correct. So this is what is capital, right? So capital is profit drawings. Opening capital plus profit minus drawings. So now you do one thing. So you keep opening capital this side. You just take out profit also this side. You take out you take drawings also this side. So what will happen? 334,000. So plus profit will become minus profit. So you know this is basic maths. So when plus comes this side, it becomes minus. So minus becomes plus. So minus drawings become plus drawings is equal to opening capital. Opening capital, you keep as opening capital here itself as it is. So now opening 234,000 minus what is profit? Profit is 31,000. What is drawings? 44,000, 42,000. Drawings is 42,000. Is equal to opening capital. So now subtract all this. Let us see, calculate 234 minus 31 plus 42 is 245 is equal to opening capital. So this is what we want, right? So this is what we want. So 245,000 is the answer. So the answer is 245,000. So it is simple. If you know basic maths, then it's very simple. Otherwise, it's a bit complicated. but by understanding this, by doing this in this particular steps, you can do it easily. Okay, so this is done. Then the next one, let us see what is there in the next question. Which of the following is not correct? Assets is equal to liabilities plus capital. This is correct. Capital is equal to assets minus liabilities. So capital you keep here. Assets minus liabilities. This is also correct. Capital minus liabilities is equal to assets. This is wrong. So this have to be both the sides. This is wrong. So liabilities is equal to liabilities you keep here. Assets will come here, or you keep this side. Assets minus capital. This is correct. So this is wrong. So this is the answer. Which of the following is not correct? So C is not correct. That's it. Okay. Next. Fourth one. The following 12 balance have been extracted from Excel books at 31st December 2019. So advertising, bank, capital, all these things are given. So expenses, all is given. So inventory at 31st December, profit for the year was 50,756. Okay. So prepare X and SS statement of financial position for the year ended December 31st December 2019. So I think you should be able to do it in a quicker time. So let's have a competition. Let's check who can do it faster. So whether you or me. So, and we will see who will be right. Okay. So you can just start working out, and you can just visit this solution once again after you have finished it. So, so let's start. Non-current assets. So what are non-current assets? Picture. What is equipment? How much is equipment? Equipment is 42,190. Fixture is 29,234. So that's all. Non-current. Motor vehicles is here 17,459. So that's all. So no other correct. So this is non-current assets. Now come to current assets. Just total this and put it 42,190 plus 29234 29234 plus 17459 17459 888 883 888 current assets. So let us see what are the current assets. So bank balance is there. So first let us make a list. So what is required? Bank is required. This 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 is not required. This is required. This is required. This is not required. This is required. This is not required. This is not required. This is required. This and this is not required. Okay. So in this, what all we have taken? So now come to current assets. What are the current assets? Inventory. Inventory is given here. In the question 35331 inventory. Remember ITC? Inventory. Always write it. Remember it. ITC. Remember ITC. Inventory should come first. Inventories 35331. 35331. T trade receivables. Trade receivables. How much is trade receivables? 26043. 26043 trade receivables. Then ITC cash. Cash in hand is there? No cash. Bank balance is there. Bank balance is there. 8802. Three five three three one plus 26043 plus 70176 add plus 159059 total assets okay. So now capital on the liability side, capital. So opening capital. What is opening capital? Opening capital is given here. 71,400 less drawings 51,500 plus profit. What is the profit? Five 0756. So just calculate 71,400 plus 50756 minus 51,500 229715 2297. How is it possible? Not be that. There is some mistake. 71,400 minus 51,500 plus 50,756, right? Yes, 50,756. 50,756. 70656. 70656. So this is open or capital. So now comes current, non-current liabilities. Non-current liabilities. So bank loan, so repayable by 2023. So how much? 46006. 46006. So current liabilities. Current liabilities. What all is included in current liabilities? Current liabilities. Trade payables 42397. Four two three nine seven. Now we add S 46006 S 159059. 159059. So this is total liabilities. 159059. So total assets. So this is statement of financial position, non-current assets. This one, non-current liability, non-current assets, current assets, total assets, capital, non-current liabilities, current liabilities, total 159059. So done. So this is the end of statement of financial position lesson. So practice more and more questions, because questions are often asked from statement of financial position, and you have to be very fast. And along with this, you may have to do a lot of adjustment questions also. So which we will be continuing from the next class. So next class is based on theory, so but very important. So I have observed a lot of students, they ignore theory, they focus only on practical questions, thinking they are more important, and theory is less important. So they don't do that. So everything is important, everything is scoring. So please try to learn everything. Okay, so don't skip anything at all. So have a good day, good night, take care, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing statement of financial statements, statement of financial position. Okay, so today so this is David Hopkins' latest book. We'll discuss activity 8.1. So before having looking into this class, I would request you to try answering the question on your teacher from wherever. So then you can cross check with the solution, so that you can confirm your understanding. Okay, so activity 8.1. Jana, a sole trader, had a capital account balance of 89,350 on 1st April 2019. During the year, Jana made drawings of 22,720. Prepare the capital account. Okay, so capital account. If the profit for the year of $26,390 had been made. So close the closing capital. Next one, B. This is part A. This is part B. Calculate the closing capital using the listing approach. If a profit for the year of 26,390 had been made. So You can try on your own based on your understanding. So there are two ways. So what is one way? You have to learn how an account is prepared, what will come on the credit side, what will come on the debit side, and list of items, what will be added, what will be subtracted in listing approach. So that way you can do, or you can understand and you can try. So now let us discuss the solution. So first, prepare the capital account. So capital account. So capital account is usually in a T format. So this side is always debit, this side is always credit by default. So dollar currency will come here. Then first one, add a capital balance of 89,350. So capital balance, capital is a liability, right? So always it will have credit balance. So remember, capital is a liability and always it will have credit balance. Credit balance means it will always come on the right side, 89,350 by default. Okay, 89,350. This is on what date? This is on 1st April 2019. So balance brought down 89,350. Okay, so then during their Jana made drawings of 22,720. So drawings are exactly reverse of capital. So where they come, drawings will always come here. So drawings. How much? 22,720. Now, profit of 26,390 has been made. Profit. So profit of 26,390. So profit means normally it is credit balance, right? Profit is always credit because credit all incomes and gains, no? So like incomes always show credit balance. So profit means it's a credit balance, so it will always come on the credit side. So 26,390. 26,390. So that is profit for the year. Prepare the capital account. So that's all. So capital account. Done. So those are the items that have been given. So now what you have to do? You have to add this side and this side. So which side is heavier? Obviously this side, right side is heavier. So if the right side is heavier, it's called excess credit. So excess credit means balance will come here, balance carried on will come here. So this plus this minus this. So you add both and subtract this item. So 89,350. 89,350 plus 26,390, 26,390 minus 22,720, 93,020. So 93,020. So this is the amount. So plus 115,740. So this is activity. .1 A. This is A. Okay. So now come to B. So very simple. So you can just check once again. Activity 1.1a, 8.1a, debit this side drawings and balance, and credit side balance brought down and profit. That's all. Okay. So then we have to add. This is the balancing figure. So this is balancing figure. So that's all. This is given. This is given. This is given. Everything is given. So we need to write simple. We have to just plug in the figures. So it's very simple. Capital account is very simple. So now prepare it in the form of a statement. So when you are preparing in the form of the statement, you have to add these two items and you have to subtract this item. That's all. So to start with the opening balance. So calculate closing capital using the listing approach. So part B, section B. So answer B. Okay. 8.1 B. Activity 8.1 B. So capital, opening capital at the beginning. So this is capital by listing approach. So this is the capital at the beginning. Same by default 89,350. So to that we need to add profit 26,390. And when we add this and this, how much do we get? 89,350 plus 26,390. 115,740. Yes, same. It is the same question again, but you are doing it in a separate way, different method. That's all. Okay. So drawings. Drawings is 22,720. Less drawings 22,720. So subtract 22,720. So 93,000. Same answer you get. 93,020. 93,020. So it's very simple. So you have to add whatever is there this side you have to add, and whatever is there this side you have to subtract. You will get the answer. So listing method. Dear friends, welcome back to Shasha's virtual classroom. So today we will discuss activity 8.2. This is from Statement of Financial Position. This is latest book of David Hopkins. So we will discuss activity 8.2 here. So let's start. So Raza is a sole trader. The items have been the items taken from his trial balance 31st May 2020 that relate to the statement of financial position are as follows: bank balance 3245, bank loan repayable 2024, bank loan repayable 2020 28,330. So cash balance 510, capital opening balance opening of 1st June 2019, 1st June okay opening. So 169945, drawings 33,450, fixtures and fittings for 44,125, premises 33,000, premises trade payables is 33,075, premises 1,27,600, 127,600. So trade receivables 36,085. The loss for the year was 9,145. Inventory at 31st March was valued at 51,340. Prepare a statement of financial position for Raza at 31st March. Statement of financial position at 31st March 2020. Okay. So just before starting this, let's understand a few things which are very important. So statement of financial position of Raza and audit 31st May 2020. So before doing this, let us understand a few very important concepts. So what are the, so there are 5 line items, okay? So there are 5 line items, 5 steps or 5 line items. In statement of financial position of a sole trader. What is the first one? First one is non-current assets. So non-current assets are fixed assets. So we need to write this in an order. So particularly item amount wise, whichever is heavier, we can write that. Or the asset which has got longer period of life, we can write that first. So you have to follow a specific order. So though it is advisable, okay. So then the next one is current assets. Current assets. Here also order is important, like whichever are realizable on the basis of realization. So first inventories, because inventories cannot be easily realized. Then comes trade receivables. Then cash and bank balances. So like this, okay. So then we have to total of this. So this is asset side. These are total assets. Then comes liability side. Coming to liability side now. So these 2 line items are over. The third line item is capital. So capital account we have already learned. So first we need to start with opening capital, opening balance. So that from that we need to subtract drawings. So to that we need to add net profit for the year. So that will give closing balance. So we need to write the capital here. Then fourth line item, non-current liabilities. Non-current liabilities. So liabilities which are payable for more than after 12 months. After 12 months. So they are known as non-current liabilities. So the outstanding date is important. So on the date of balance sheet, from the date of balance sheet, after that 12 months from there. For example, if any, this is 31st May 2020. So if any liability is payable after 31st May 2021, after that. So this is 31st May, after 1 year, lapse of 1 year, then it is non-current, it should be recorded as non-current liabilities. So you know what are liabilities, right? So liabilities are something we owe. So non-current liabilities. What is current liabilities? Current liabilities are the liabilities that are payable within a period of before 12 months. So if there is any amount outstanding on 31st May 2020, so between this period and this period, between this period, if any liability is payable between this period and this period, it is current liability. So basically it is equal than or equal to 12 months. So less than or equal to 12 months. If any liability is there which is payable within a period of 12 months, it's called current. Current means we have to pay immediately. If not immediately, within 12 months. Non-current after 12 months. After 12 months, okay? So very important. So again, these things. So statement of financial position is somewhat easy. So this you have to understand. Just understand what are the line items and where to plug in the figures. And following the particular format is also very important. You have to follow the specific format. It's very, very important. So now, statement of financial position. Okay. So first we need to write fixed assets. So premises is very heavy. So premises, let us write premises. So first we have to write non-current assets heading. In the non-current assets, we need to write building premises. What is the value of premises? Value of premises is 127,600. Which is the next item which is a bit higher, furnitures and fixtures. Furnitures and fixtures and fittings. Fixtures and fittings. Now what is the amount? Fixtures and fittings, it is 44,125. 44,125. So any other assets are there? Any other fixed assets are there? No, only two fixed assets. So very good. So first you write this. So both you add together and write 127,625 is 127,600 plus 44,125. 171,725. 171,725. So current assets. Now coming to current assets. Current assets first, we need to write inventories. Inventory means inventory at the beginning, at the end of the year, not at the beginning. Inventory 31st May 2020. What is the inventory on this date? 51340, 51,340. 51,340. So then trade receivables. So remember this as ITR, okay? So remember this as ITR. ITR is inventory trade receivables. ITC, not ITC. Oh, C is cash and cash equivalents. C, cash and cash equivalents. Trade receivables. So trade receivables is 36085. So then next one, cash balance. Cash balance is there, bank balance is there. Yes, cash and bank balance. So bank, cash. So what is the bank balance? Bank balance 3245. What is cash balance? Cash balance is 510. So we have finished. We have written this, we have written this, and we have taken this, we have taken this, we have taken this. So we have taken so many line items. 2 fixed assets, 1, 2, 3, 3 current assets, 4 current assets, trade receivables, even this is included, that's why, okay. So now we add together and write, that's all. 51340, 51340 plus 36085 for 308 plus 3245, 3245 plus 500, 91,180. 91,180. Add this together. 262,905. 262,905. This is total assets. So total assets 262,905. Now we have to find out total liabilities. So before this itself, we have to write in an order. So this is a presentation, remember, always. So first you write capital. So capital first at the beginning. Capital at the beginning is 169,945. 169,945. So less drawings. There are drawings. What are the drawings? The drawings are here, 33,450. 450. So it said there is a loss, 9145. Loss 9145. So put it in bracket. So you just calculate 169,945. 169,945 minus 33,450 minus 9145. So 127,350. 127,350. Okay, so capital. So this is also considered. Everything is done. What is remaining? Bank loan repayable, and trade payables. Okay. So now we have to write non-current liabilities. liabilities. So bank loan, which is repayable after 2024. Loan repayable 2024 144,150. 144 150. So straight away you can write yes. Bank loan repayable 2020. So that is current liabilities. This is non-current liability. Now you write current liabilities. Bank loan 2020 28,330 28,330. So then bills payable or accounts payable, trade payables 33075. Trade payables. Trade payables. How much? 33075. 075. Add this. 28330. 28580 plus 33075. 61405. 61405. So now you add 127350. 144. 332905. So total liabilities is 332905. Yes. Total assets is 262905. So where is the difference? Minus 70,000 difference is there. So where is it? Is there any error here? Correct. Let us cross check. What are the assets? Premises is 197600. Correct. So let us check 144,150 plus 2880 plus 169,945 plus 33075 33075 377 375 500. So total is 375 500 this side. So these are the credit balances. So inventory and this are by default debit balances. Let us check. So these are credit balances. 3245 plus 510 plus 3450 plus 44125 plus 197600. Premises have you taken 197600? So this is the, here it is the error. So it is 197600. This is 197600. So this is 197600. So that is what 70,000. So 197600 means this is not one. So it is 197600 plus 44125. So 241725. So this is 241725. 241725. So this side it will be correct, the same value. So we got 70,000 difference. So it is 332905. Three 332905. So okay. So now it is matching. See, what do I advise to you is in the exams, whenever you get a difference, don't try to find out the mistakes. Try to finish the paper first. So I never used to calculate the totals. I used to do everything and leave out this part. I used to leave out this part. I would not total it. I would not total this. I would not total this. Why? Because if in anxiety, what we try to do is we will try to figure out the mistake. Figure out the mistake, we'll try to look at the entire problem once again, just trying to check where the difference is. So because of that, we'll be losing almost, we'll be wasting almost 30 minutes, 30 to 40 minutes. Ultimately, whatever we get is just 1 mark. So it is not worthwhile. In the meantime, we would have got around 6 to 8 marks in other problem. So it is not worth. The opportunity cost is very high. So never try to find out the mistake. Even if you do the total, if you get any mistake, leave it as it is and try to finish the paper first. Please try and finish the paper first. Once you finish the paper, you come back again and you can cross check, because at that time you will not be losing any marks, because you will have finished all the paper. And then obviously if you discover the mistake, it is great that you will get whatever 1 mark or whatever. So just because for 1 mark, don't try to so it is a very important advice, it is very important practice that you have to adopt, you have to follow, that never try to figure out the difference, never try to tally. No, that is the usual, that is the problem in most of the students. What they do is they try to tally the balance sheet, so they tally the statement of financial position, so thinking that they will lose marks, otherwise they may lose out marks. No, nothing like that. So uh, finish the paper first, finish the paper. So even if there is any difference, you finish the paper first, then you come back. So maybe there are some easier questions which you can do, which you do easily without any mistake. So ultimately, you would have got more marks. You would have realized that also. So never do that. Please don't do that. So take this advice as very important, and you have to follow from now on. So all the best. So we will continue in the next class. Till then, have a good day. Good luck. Dear friends, welcome back to Shastra's virtual classroom. So today we will discuss activity 8.3. So produce a statement of financial position for Samara using the information in work example 4. So Samara this is work example 4. Okay. So this is Samara. So we need to prepare statement of financial position. Statement of financial position. So let us have a look at the items that have been mentioned in this question. So as at 30th April 2020. So statement of financial position at 30th April 2020. Okay. So rent and rate, motor vehicle. So motor vehicle is an asset. So furniture and fixtures. So we need this item. We need this item. We need this item in statement of financial position. We don't need this. We don't need this. We don't need this. We need this bank loan. We don't need this. Capital is required. We don't need this. So commission received not required, not required, not required, not required. Trade receivables yes. Drawings yes. Can I no motor expenses, no bank balances. So these are an inventory is required. Okay. So these are the items which we need. So other than this, we don't need any of the items. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So let us be fast. So what you can do, please try working out the solution on your own, and you can cross check after having a look at this, whatever we are doing now, discussing. Okay. So try working out on your own. So the pace should increase. Actually, your speed should increase automatically. So by doing this way only, you are going to get a hold of the subject. Okay. So first we have to write non-current assets. Motor vehicle and furniture, fixtures and fittings is non-current asset. So first item is non-current assets. So here dollar. Don't forget to write the currency. Non-current asset. What is it? Motor vehicle fixtures. Motor vehicle fixtures. How much is motor vehicle? 7,400, 25, 30. 7,400, 25, 30. So it is 99, 30. Non-current assets. Now current assets. So current assets, remember, I told you, please remember the concept, just remember it as ITC. ITC is nothing but inventory. Inventory, what is the inventory? Given at the end. Always you have to take inventory will be given here, 3760. Trade receivables. Trade receivables is given here, 3,400. So it will be 7160. So let us mark the items whatever we have taken, so that there is no double counting or leaving out any item. So we have taken this, we have taken this, we have taken this. We have taken this, we have taken this also. 4 line items we have taken. Next, current assets is over. So this is the on the asset side. 0, 9, 0, 70. 17,090. So total assets. Oh, so one more thing is left. Sorry. One more thing is left. Bank balance. Cash and cash equivalency. Cash and cash equivalent. So that is known as bank balance. So bank balance is 620. Let us check if there is cash balance. Let us check if there is cash balance. Okay, it's not there. So no cash balance, only bank balance. This will change. This will increase. This will become 0, 8, 7, 7780. This will go off. This will change again. And 930. Yes. 17710. Okay. So this is done. Now, liability side, first we have to write capital. Opening capital. Capital is given here. 7980. Less drawings. Capital has been taken. So we have taken this. We have taken bank balance also. Drawings is 4,000. Add profit. So where do we get the profit? We had done in the previous class. So that is in a statement of profit and loss. See here. From activity 7.3 in chapter 7, we know that the statement of profit or loss produced a profit for the year of 9,830. 9,830. So now we add all this. So you get the capital. So 7980. 7980 plus 9830 minus 4,000. 13810. 13810. So now non-current liabilities. What are non-current liabilities? So bank loan repayable on 2022. 2022. Okay. So long term. 2022. How much? 2,000. non-current liability, current liability. So what are the current liabilities? What are the various current liabilities? So we just have a look. Trade payables 1900. What else? What else is there? Let us check. So trade payables also taken. Nothing else. That's all. So 1900. So current liabilities are so much. So now you just add 13810 plus 3900. 17710. 1771. So you can cross check. So here asset side also 17710. Liability side also 17710. Total liabilities 17710. Okay. So done. So this is excess activity 8.3. So we have finished activity 8.3. So we can then have a good day. Good night. See you. Dear friends, welcome back to Shasa's virtual classroom. So activity 7.1. Today we will be discussing activity 7.1 from statement of profit or loss.